What is going on, traders? I am done with my day. Had a great day. A 100% win rate kind of day on better than 1R. So, good day for me. And I figured, while we go into algo o'clock here, which is 10 to 11 a.m. Pacific Standard Time for me. That's 1 to 2 p.m. All the fat cats eating sushi at the fanciest restaurants near Wall Street. While they're away, all the algos will play. And so will I here live on YouTube. So I am going to trade a little bit of MNQ and MES live and just hopefully have a good time doing it. I need to tweet this out to the world so we get a few more conversations going here in the live stream today. What is going on? RJ, LFG, what the heck is LFG? What is LFG? LFG. Tell it to me. Hit me up on Telegram, RJ. I think that's you. Hello, my brother, my friend, my family. I hope you're doing well. Let's see. Let's freaking go. Okay, let's do it. Thank you. I hope the delay is not too bad. I put it on low latency. Any more than that, and I get worried about, I don't know, just the buffering and everything. So, well, I don't know. We'll see. We'll see how it goes. Here, let me just get the link and then do a quick share to. Oh Jesus! My headphones are turned up way too high. Okay, copy the link. Go to Twitter. Live streaming and trading in real time, MES and MNQ. Come join for market discussion and good trading times. How about that? That's super cheeseball. I like it. ESF, NQF, hashtag Orderflow, hashtag footprint, hashtag FNG. Oh, no, LFG, sorry. Thank you, RJ. And the link, and it goes out for all the world. Am I on the right account? Yep. Okay, cool. Bling. All right, we're good. All right, let me get this. Hey, there's the Telegram. All right, RJ, it is you. Finally caught you live. Yes, sir. You caught me live, my friend. That's okay. I'll keep my Telegram open for you, my friend. Anything you don't want to tell everybody here, you can talk to me in Telegram. It's all good. Let's see. And I feel barely set up here. All right, let me get my treadmill up to speed here. Big ticks to the downside. Just looking here. Where might we get a bounce? So this is the NQ chart, but I will execute on this chart on MNQ, which is why you see NQ footprint, right? And then it says ENQ/MNQ, which means NQ data and then MNQ execution. That's what that means up here in the title bar. ES data, right? So we track the ES to trade the MES, and MES execution. So that's what it is. Let's make sure that orders are on. Okay, on these screens. Okay, let's test it. Make sure. Yep. All right, we're good. Cancel out of that one before we get filled. Let's see what happens here. Let's see what happens. Can we get on the board? Win, lose, or draw. Can we get on the board? That is the question. I think this will take out the wick high, 11,865. That is the natural thing to do. Weep. All right. All right, we're on the board with that was 20-point stop. We took 12.81 points, or I think we took 13 points-ish, maybe. Or 14 with slippage. I don't know. I don't know what the bid-ask spread is. Took out the highs. That's okay. This stop doesn't act. Hold on. Hold on. Oy vey. Alright. Now let's see what's happening here. We rotated above this volume node here. Now where it's pain for longs. Alright, let's just get out of this one. Alright, I'm not centered yet to trade algo o'clock. I'll just talk a little bit about my trading and then I'll start focusing, because I am not focused. So the only trade I shared on YouTube was this one, or on Twitter was this one, which is these stop targets. The red lines are entries right here, and right here. Let's do this. There's one. There's an entry. There's an entry. So 3 entries. You can see how my stops were all here. My targets started here and exited here. So this was, they're all the exact same size entries. One is 3.75 Rs because of where I get in and where I stop. The stops are in very similar locations. Right, so that's this one, the entries here, which is, this yellow, whatever. And the profit taker's down here on that, right? So you can see that the stop is only this big, but the profit taker's way down here. So, I don't know, the average R's are somewhere around 1.7 for this trade. So this was my last big full-size contract. Look at us dump. Trade of the day. See, I would like to scalp long here. Why? Because we're in algo o'clock. Break the lows, find the stops, whoop, back up. 0 prints here. See that? And look at them. And on the TPO chart, we're very much in initial balance right now. And we've tried the 50% breakout to the upside, failed. I'd expect to try 50% to the downside, and maybe that fails. But in this kind of environment, if you can identify it, and you identify you're in an IB kind of day, initial balance kind of day, right? What ends up happening on a day like this is you short breakouts. You short upside breakouts, and you long downside breakouts for little moves back to the middle. And so that's why I said what I just said right now. It's because of the type of day we're in. So if I go take, let's make sure I'm not showing everything here, the whole world, something. Okay, so if we take this TPO chart, let's do this. Let's go like that. There we go. So you see this bar here, this blue vertical bar, light blue? That's initial balance, first 60 minutes to trade. I expect us to try and find some extension to the downside, right? So overall bias right now would probably at some point to be exploring the short side to try and attempt breakout from initial balance. But when you have wide initial balance here that fails 50%, before 50% of the upside, typically we come back into balance and we come down and we try the bottom side, and it usually, not always, it usually fails, right? So you usually go to 50% to the downside here, about here, and then it fails. But in the meanwhile, all the moves reflect that kind of failure, right? So what you're doing is you're learning about the character of the market by thinking about this stuff and listening to me talk about it a little bit. And this is how I think about how I'm going to trade that day. There's 40, 50, 60 different type of market scenarios or characteristics, and today is just one of them. This is a major one, right? So if you read Dalton's Mind Over Markets, you kind of get an idea about these things. But I have just my own, what I've learned about it and how I talk about it. I'm not like a verbatim guy. Oh, Dalton says this, therefore I do that. I don't trade that way, right? I read books, I mass the information, and then I apply it in my own way, but you'll never hear me say something like, Dalton says this, and that's what I follow. No, I try to observe what works, and so this works on a day like today. So, do I expect some downside? Sure. Is that the bias in the back of my head? Yes. If I'm taking an intraday swing position, that's where I'd be going for. If I'm scalping, however, I'm scalping moves like I just described, right? Trying to break lows, coming right back in to essentially balance, right? Short-term balance, this bar breaks it, and whoosh, right back in. Now testing balance, now we're continuing trend. But this would be a scalp play. Back to the node, right? Put a tight stop on it, call it good. Wait for hesitation in here, play it back. So, scalping rules. All right, starting to get a little more centered here. I watched something on YouTube last night about Devin Larratt, who is going to be arm wrestling Levon Saganashvili, Georgian Hulk. And Saganashvili says about Devin Larratt, he says, one of Devin's weaknesses is fear. And so Devin video responded on YouTube saying, you know what? So, in a little background, Devin Larratt is was ex-Special Forces in the Canadian, whatever you call it. I don't know if they call it Army or whatever it is, but so he's a bad dude, okay? And Devin basically talked about his background in school, and he was one of these, essentially, or ultimately, he says he was ADD, and that he is a thrill seeker. And part of getting thrills is that he seeks out fear or situations where fear exists because it makes him feel alive. And I thought about that a lot because I was like, why do I do some of the live YouTube things where I could make myself look like an idiot in real time for all to see? And I thought about it. I was like, it's partially because I've been trading for a while and I want to feel alive, right? It's I get juiced sharing all of this in real time, and I know I have edge. That's not a question. I can do it whether I'm live or not, but I get a little juiced. So the better the conversation in here, the more alive I feel, the more I stick around. That's just how it is. So anyway, little personal reflection there. Not really important to trading. Hey Marcin, what's going up? What's going on? Hey G Trader Lord of Skies, what's up, buddy? So anyway, little bit of reflection from TYP, aka Mike. My name is Mike. So call me whatever you want to call me. Asshole's fine too. I've been called that. Let's see. Here, I'm just looking at other charts here. I'm looking at us trying to extend down. I'm going to clean up this chart. Why do I need to keep this up here, right? Let's do this. Where are we at? Where's the erase button? There you go. Bing, bing, bing. I think that's all we need. Let's see. What else do we have on the chart here? No, no. What is this? A big daily, some big daily trend line thing? All right, let's get out of erase mode. Let's go into the modify text. Daily trend line. That, whoa. Whoa, did you see that? It moved. All right, now we gotta see what's going on here. You know why it moved is because I opened it in properties and it now changed the point at which it's anchored. So I need to re-anchor that thing on the daily chart to what it should be. Let's do this here. It's exactly what happened. Let me test that. All right, bing. That's irritating. One of the weird things here, let's see. Oh, I might have to really zoom on that chart to get it right. It's okay. On a daily chart, you guys can't see. All right, let's zoom in. Zoom way, way in. Get this. I need to just get this this daily trend line right. There we go. We're on it. That's it. Bing, bing. All right, so that's right there. Actually, here, I'll show it to you guys. This is the daily trend line. Check it out. Here. Right here, from up here through here, and we're here right now. So you can kind of think of this as like a regression channel here. Yeah, something like this, right? And where the median line is somewhere in here. Oh, that was poorly drawn. And that's what this represents to me. Kind of a regression channel, the center line of it. And so, you know, when markets start moving in impulses, flag, balance, double balance, well, they tend to come back like this. And they might come back to this line sideways like this. So it doesn't mean you buy, but it does mean that, you know, you start to get wary selling off this trend line in here. Definitely. So that's the daily time frame, but obviously you've got the TPO inside kind of day thing going on, right? It's the same thing with the Nasdaq, so you know that's a little shorter time frame. But anyway, let's go back here and put this chart into the mode it needs to be. Come on, there you go. Come on. Linux and wine here, moving my charts around. Big Mike. Watching this turd, Big Mike. Hey. Let's see. Big Mike is getting smaller. Big Mike is getting. If I'm Big Mike, I'm getting smaller and smaller. Doing a lot of healthy eating. Healthy eating. I ran my fastest mile the other day that I've ran in a long time. I used to do half marathons. I've never done, well, I've ran marathon distance, but I used to do 6 to 8 half marathons a year. Used to. And then, I don't know, tore my calf muscle on a trail run near Mount Diablo years ago. I was, you know, a little bit about the trail run. People were jumping on rocks over a river. It was, I will say it's a creek, right? Not a river, creek. And it was about 12 feet across or something. But there was an area, and then there was a bank on the other side kind of going vertical. But there was a big rock, and all these people are lining up. And I'm like, MFers, you know, I want to be top 20 in this race. There's like 300-400 people doing this trail run. And all these people are, they booked it up to this point. This is all uphill. If you know anything about Mount Diablo, it's a mountain bay, right? So it was, I don't know, 4 to 6,000 feet of elevation on the front half of this trail run. And these people had all overexerted themselves to get to the creek crossing first because we all knew about the and I was like, I'm gonna either run through the creek because it was early on in the race, or I'm gonna do something else. But I didn't overexert myself, so I was probably middle of the pack by this point. But everybody overexerted, so they welcomed the rest to get through this river. But me, I had paced myself. I didn't want to blow up, and I knew I was just going to keep trucking on the front half, and then on the I wasn't going to blow myself up, and then the back half of the race, the last half was all downhill back to the finish line. I'm like, that's where I'm just going to fly, right? And I'm going to be like on the edge the whole time, but gravity's going to take me. Anyway, I jumped this creek, landed on the other side, and tore my calf. So it kind of backfired, right? I did an explosive move, tore my calf, like literally, tore it. I finished the race, but I walked up that whole hill. It didn't bother me on the not the whole hill, the mountain. It didn't bother me on the downside so much, but I didn't realize how effed up I was. It probably took me 4 or 5 months to recover from that torn calf, because I mean, obviously I ran about 10 miles, 4 or 5 of which was just straight up walking. So I ended up tearing my calf. My wife, who at the time was studying, right, for some certification, she's a registered nurse, and she was 2 hours away, and I ended up not bringing my wallet. I forgot my wallet that morning. So she met me there at the finish line. So I told her right before the race started. I was like, babe, I don't have my wallet. I don't have, that time, I didn't have like credit cards loaded on my phone, like nothing. I wouldn't have been able to easily get back home because I would have been out of gas because of a 2.5 hour drive. So she ended up meeting me at the finish line. As I went through the finish line, I saw her, and I was in so much pain. I didn't even realize how much pain I was in. Right? I just pushed myself with the torn calf for, I don't know, it was hours of this race, right? And I saw her, and I started bawling like a baby. I'll never forget that moment because it was so visceral, and I was so surprised by my own emotion. I completely broke down, and everybody's watching me looking like, oh, this dude must have been so happy to finish this race. All I could think of was that people were thinking, this guy is so happy to finish this race, he's crying. But it was more about, I was happy to see my wife, and my body, my calf, I was so broken down at that point from running in pain. And I'm kind of a tough guy when it comes to that. I've played basketball and stuff with injuries. I shared a video with an old Discord guy, and me just shooting around. Just say, hey man, I know how to play. In that video, I was actually, my knee was all jacked up, so I couldn't move very well. And I remembered that after. I was like, oh, that video, I was messed up. I had made that video because when I used to play video games, someone would say, you're not a basketball player, you liar. I'm like, yeah, I am. So I made a video while I had a hurt leg. And anyway, so DDC, if you're watching this, you probably aren't. You're a family guy. You don't have time for this stuff. That video I sent you of me playing basketball or shooting hoops, I was injured during that video. So anyway, crazy story. And my wife was surprised as heck to see me crying. I composed myself right away and explained to her, I have a torn calf, blah, 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 blah. It's just a crazy. Anyway, I'm on YouTube because trading, because I dig feeling alive. Anyway, here we've got the beginnings of IB extension here on the E-mini. This is what we were talking about. Look, See it? We're not quite, so the 50% line is here, right? So you would expect right here for the market to test this area, maybe go a little further, and then come back in. We'll see. We'll see. Everybody got bullish on Twitter this morning. So let's shake them all out. Not everybody, just the people I take heed with. All right. So enough of my escapades. G-Trader, Lord of Skies, having an RN wife is flex. And my wife's amazing. I can't speak any more highly of my wife. She's just amazing. I'm really lucky. I am really lucky. I married up for sure. Looks wise, brains wise, personality wise. She's just cool. Anyway, 2008 guy. I don't have a Discord anymore. I got rid of it. I do the YouTubes because for the reasons I mentioned earlier, but it's a lot less involved. So Discord was taking 2-3 hours or more of my day every day. And it's different. It's a lot more personalized. So we would get on mic, share screens, you talk to people live. It's a little harder to break away. And I struggled with breaking away. I'm a bit of a sociable guy. I like to talk to people and talk about markets, but I can overdo it, right? And I'm trying to balance this with my family life. So anyway, I'm going to plug it one more time for Mr. Ticino, whom I have no monetary affiliation with or financial agreement with whatsoever. I'm going to be sending Ticino the chart book that will contain this heads up display. He'll probably modify it and do whatever he wants and put it on his level 1. You guys should subscribe. It's $5 a month for all of hundreds of his awesome order flow, footprint, price comparison, TPO, all kinds of iceberg indicator charts. Ticino did some awesome ones on his level 1 subscriptions. And so if you guys subscribe to Ticino, you're going to be getting this pretty soon. So I just need to just email it over to him. Only reason I know this is because Ticino said he had a user say, hey, can you make this TYP guy's heads up display thing? And Ticino, being the upstanding guy he is, emailed me and said, hey Mike, are you okay with this? I was like, sure, go for it, man. So Ticino Trader, TICINOTRADER, has a website. He sells chart books for cheap, but they aren't cheap. They cost very little and they have great value. I learned how to use Sierra Chart by subscribing to his chart books and then tearing them apart and understanding how to use the software. Okay? So I'm plugging him because I owe that guy essentially a lot of money for all the money he's made me by teaching me through sharing really inexpensive chart books how to use Sierra Chart properly. And that's why I do it. I'm paying it forward to him because I've long argued to anyone who would listen, he doesn't charge enough at all. He needs to charge more so you guys quit sharing his stuff between yourselves for nothing. Pay the man for what he's done. And so I have mad respect for Ticino Trader. Okay? So that's why I'm talking about this. No other reason. There's no financial gain for me. Zero. If anybody claims that, I'll show you the emails minus any personal stuff we talk about. It's nothing to do. Well, actually I won't show you the emails because you can't play me like that. But if someone makes it a big deal, I'm gonna put you in your place really fast. So anyway, Oh, look at me, tough guy on the internet. Whatever. Um. So anyway, yeah, subscribe to him. He's got a really awesome service, and I owe him many debts of gratitude. So that's why I keep paying it forward. So he contacted me and said, "Hey, are you okay with me trying to build this?" And I said, "Dude, not only am I okay with it, I'll just send you the freaking chart book. And here, go put it on your whatever you want to do with it." He asked me what, here, go put it whatever on your site. I am totally happy with that. You owe me nothing. Just thank you very much for helping me all these years, for providing this inexpensive content that is highly, highly valuable. All right, I think we may have. Oh, sheesh. That was bad. Left over for the E-mini trading. My goodness. All right. Well, long one micro. Long one micro here. We'll give it a few chances. We may extend down here. Again, we may try and go for the 50% shortly here, or this big volume node may turn into, this was the fake out, and now we rip to the upside and test maybe somewhere up here. So anyway, God, so rantalicious I am sometimes. And let's see what happens. I don't even know. Where does this thing turn into? A bit. 0.8R trade. There you go. Let's get on the board. Nope, it's not even 0.8R. Golly, that was terrible. I should have let this thing run up here. Oh well. Little more. Little more. Come to Papa. Jeez. No such name. Gamma. Sure. I do factor gamma into my trading. Bing! We got liquidity above. They might go get my stops up here. Come on. Or not. Who knows? Ba, ba, ba. Da, 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 da. Come on, fill me up, Buttercup. All right, flatten. All right, 11 points. HZ Meister, he said, "I'm listening to you in the background. Could you say the prices you're referring to instead of up here? Thanks." No. I'm not going to do that for you. You can watch with everybody else. Sorry. I'm just going to talk how I talk. I'm not your radio broadcaster. Here's HC Meister's like, "Hey, can you make it convenient for me? I really would like to just listen to you so that I know where to buy and sell." Maybe. Is that what's going on, HC? Jeez. It's like one guy I remembered about this morning. He's like, "What's your expectancy on all your trades?" I'm like, "Really? Was it you, Adrian?" I think it was. "You should know better." And then he came back on the YouTube stream the other day and was like, "What's your average size when you trade ES?" Like, oh, do you want to know about what we do in the bedroom with my wife too? Come on now. Have some common sense, kids. Don't ask about certain things. Think before you talk a little bit. If you want to unsubscribe, go ahead, do it. Unsubscribe. You're not going to hurt my feelings. Anyway. Jeez. What is going on, Kusa? Flat. Yeah, no position. Yeah, flat. Let's see. Okay. That's exactly right. It's just weird. People have no comments. It's, you know, it's the great internet. That, like, they'll just alias, right? And get rid of their persona. Ask whatever you want to ask. Say whatever you want to say. Oh, Saberfly, you're funny. Anyway, let's figure. Let me see if I can figure out what's going on with this market now. The reversal. So we had that little here. Let's put some lines on it. I'm not gonna be. I swear I'm not going to get trolled right now. So you don't like it that I didn't like what you said. You're gonna talk about it. If you argue too much, I'm just gonna say like, okay, moving on. Anyway, okay, so right now this is what's going on. Still making lower highs. We have a volume node, right? We had this breakdown bar from this volume node. It was met, this volume here is met with volume right here. So let's make some assumptions here, right? Let's assume that, let's look at this. There's some position here. It's broken down and it's met with covering, okay? And then they're able to sell the market a little bit, right? Some volume here, and then they cover, right? Near what? Where are they covering? Right outside here. Right outside of new lows on the day, okay? So all the breakout traders are going, yep, new lows. So they're able to maybe get long here. We're going to make tons of assumptions, okay? For the sake of hypotheses, or a hypothesis. So new lows made, they build a new position against what? Breakout traders. So this is cover from this. This is impetus. Build a position, stop the market, get long against retail, looking for new lows on the day. They got it, but it goes nowhere. So if this is a retail position, and we have this false break here, which gets aggressively bought back through, this is now not being defended right now. Are they getting out of this position from here to here, node to node? Are they? Or are they buying because they know now retail shorting from this node? Think about it. It's one potential scenario, okay? It doesn't mean that I know I'm right, but I'm following the trail that the market's giving me. So here you go. Stops hit right here. So people who are playing footprint got stopped into this node. So they're putting stops. Right here is where they put them. We just saw 0 prints up to here. Okay? So they're using this node for their stops. We just ran those. Okay. So now we wait, right? They're building volume here. They're buying again and also selling. So they're trying again. So retail traders who stopped above this node or maybe got long above this node, now they have stops up here above this wick. Now, this wick happens to be the 10-period simple moving average, and it's 10-period based on 5-minute chart. We came right up to it and rejected as per usual, okay? This is normal. I have this 5-period 10 SMA on my chart because it works. So we're still in a strong trend down right here, right? And if you see it on a, put up like a 5-minute candlestick where you can see a lot of the session, you'll see that the 10-period moving average matters in a lot of places. Okay? So now we're just waiting to see what happens here. If we break this 10, we now have resistance here. But if we start to kind of curl up, make higher lows, yes, it's still a quote-unquote bear flag. But if you wanted to, if they bought here and you had some sort of ledge like this on volume, you could probably put your stop here, target the breakout, and resistance is somewhere up here. You get 1R that way. You see that? So it's something to consider. That's all. Now, more considerations. If we consider the TPO chart, now I'm going to say here and here even more HC. My video quality is 1080p. Maybe you need a better screen or a bigger screen. I don't know. If you have a HZ, if you have a, let's see, an iPhone or something, I think you could, can't you zoom a little bit on it, on the screen? Because it's all 1080. I'm streaming in 1080. Hey, Simzum. Anyway, it's all good. But with the TPO, I would still expect extension down. But this is the short-term story. That's one scenario going on where you're looking at node-to-node price action. The bigger picture is downtrend. But the bigger picture is also you want to be thinking about measured moves too. Right? Measured move somewhere down here, but we're close. Here, right? 50% pullback here, maybe a little lower. Now you get 50%. This would be 50% extension of initial balance, right? You get a little bear flag. Now it's breaking that bear flag. So 50%, that would be 100% measured move. Then you look for potential resistance here and here on any return back up if we get it. So the market's moving that way. And you're like, well, it's so obvious. Why would the market continue to move that way? A lot of traders aren't going to be looking at it from this perspective that I'm using right now. I make it look obvious because I have some experience in knowing how the market moves. So just an FYI. This is not up. And now, what time is it? It's 11 a.m. So it's 2 p.m. Eastern. So I'm going to point something out here. You put a trend line here. If we go any lower and break this, you're talking about 1, 2, potentially 3. Rule of 3 stuff. We have 2 hours to go. That's a good timing for complex pullback and rippage into the close. So just, I know it's breaking down, but think ahead. Have a plan. Because this pattern, when it sets up with the right timing, can be very good for you. So if you start to see some strength here, you might get long here. You're like, what? That's crazy on a downtrend. And target 1, target 2, I'd probably go target 3. Depends on the timing into the close, like that. Then you're able to get 5 or 6 Rs or 7 Rs out of this trade. Again, it's just one potential. Different scenarios. Hey, Shane. Thank you, Simzum. Rares, nice to see you, my friend. Yeah, I agree, Simsum. One time framing. Anyway. Oh, let's see. So one thing I'll just sharing rather than trading. If I trade, I'm going to talk less. It's just how it goes. One thing that I think a lot of new traders do, and I'm trying to help some of you guys out, is they look back. Let's tighten this up so we can see more. There we go. Much better. They look back and they say, man, and I did. I sold way up here, right? Several times. I sold once here. I sold back here. And I covered down into this area, right? My stops were, if you saw me on Twitter, I had them all static for the whole world to see. If they wanted to run my stops, they could have. I'm not important. Anyway, so my covers were down here. None of my stops got hit, thankfully. I would have re-entered if I saw weakness. So again, my settlement level working very well. Yesterday's settlement, T+1. It works, guys. If you haven't added it, go watch my YouTube video about how to add settlement to your equity charts, because look, it just works. It just works. Why? Because as traders, I'm getting already distracted, because as traders, we should be looking where institutions buy and sell on volume and settlement. The last 30 seconds of regular trading hours trade is where institutions lay down the heaviest volume. So those levels actually matter. Okay, so this is the NASDAQ, and go look at the E-mini, right? Like, what? What are you talking about? Like, right here, look. Just below settlement, big volume node. They absorbed it on volume, turned the market around at yesterday's settlement. Settlement is not the close. Settlement is VWAP, or volume weighted average price, of the last 30 seconds of the regular trading hours. It's where the highest concentration of volume for the whole freaking day, every single day, occurs. So why the heck wouldn't you mark that on your chart? As volume profilists and footprint chartists and order flow chartists, that's the most important order flow of the whole freaking day. So mark that level on your chart every single day automatically. Do it, and you'll be amazed. You'll be amazed at how these markets move around these zones. If you don't believe me, put it on your chart and go look at the last 3 years of data. Okay? It'll blow your mind if you haven't heard about it until today. It's the single greatest level that anyone can tell you about every single day. And I don't make that claim lightly. I've been doing this a long time. A praise guy. If you don't have settlement, oh my gosh. Motive Wave has the settlement indicator level built in. It's just a checkbox. Okay? Sierra should have it. As a futures platform, it's the easiest thing. Because if you look on your quote board in Sierra chart, you can add a column called settlement price, and it populates anywhere from 30 seconds to 1 minute after the cash close, or the 4 p.m. Eastern close, every single day. So it's in the data feed. They should have an indicator built in for when users have Denali data, they can add settlement. It would be the best study in Sierra chart. You're like, you're making a lot of outrageous claims here. Look, I've been doing this a long time. And I've been calling about settlement on Twitter publicly for years. Years. Showing people how it works. People don't use it. Good for me. But it's institutional buying and selling. So of course it matters. The movements around that area. You have volume. You can play on size. You have volume nodes. You have... Do you guys know that a lot of these quote-unquote market profile inspired liquidation breaks occur around settlement, nobody talks about that. They occur around T plus 2. T plus 2. Go Google T plus 2. T plus 2 equity settlement. All right? So T plus 2 stock cash settlement. All right, I put links on Twitter for people to read about this stuff and how important it is. So go read. I'm not going to go into depth about it. I've given people the links. It'll take some reading, but it's not rocket science. These levels are the most important levels for futures, and because it occurs in futures, settlement tends to represent either the hedging or the positioning for large firms that represent the underlying stocks. So if you understand that, and you understand that futures are just a proxy or a representation of the underlying, if you really understand that, you'll go, oh my gosh, of course there's going to be movement around settlement. If you just blindly went long or shorted settlement on first touch as a scalper every day, you'd have over a 70% win rate on 1R. Let that sink in. I'm giving you the keys to the castle here, guys. Blindly. Go run it in your automated systems. Now, include in that ATR for your stop. And go look at a 14-period ATR, 5-minute time frame. And put your stop at 0.8 of 14-period 5-minute ATRs. Go plug it in. Keys to the castle. I don't care if I'm giving away a quote-unquote secret or not. It's going to work no matter what, because the volume already transacted there. It represents the underlyings. All right? Futures are, the E-mini futures, it's an index based on all the underlyings. And all those underlyings represent a heck of a lot more money with the options and stocks than the futures. But where do the big institutions hedge off? They hedge off on the liquid futures that are highly leveraged around those zones. That's why you get liquidation breaks off of levels that are based on T plus 2 and T plus 1, which is T settlement plus 1 day ago. T settlement plus 2 days ago. Now, ask yourself, why do we talk about 2 days ago? Because when you buy shares of a stock, they cash settle 2 days later. So you got all kinds of margin and leverage and all of this as an institution. And you're taking out loans to continue trading, but you're leveraged up to the hilt. Now the price is under settlement. T plus 2. You get your cash. The cash settles from your trades, right? Okay, you're now less leveraged as an institution because you have that cash settlement. But what if the market's below that? What are you going to do? You're going to sell stock into T plus 2. That level. Again, it's just an index, so it represents a whole crap load of stocks. It's not specific to one stock or anything like that. It represents a whole group of underlyings, so it's just a general proxy. But you see why it actually works? It has to do with flows. It has to do with flows and settlements of actual money. It's not just settlement isn't just some random thing that as futures traders we're like, well, they cash settle every day, and so they're going to defend that cash settlement so that when their broker gives them their statement, they make more money. No, has nothing to do with that. Has everything to do with the underlyings underpinning this whole freaking market. These trillions of dollars. That's why it works. That's why I've been talking about it forever. And I hope some of you listen. And that's why I have this heads-up display. And I track settlement. SVol is settlement volume. This is volume for the last 30 seconds of the trading day. That's what this is. And these bars are a meter. Out of 100%, it's a 30%, 30th percentile reading for settlement. So this level is not that important, relatively speaking, with the 365-day look back for relative settlement volume. These are the levels. That's why I track it. It's why I put this meter here. It's why I have it on my chart, because I want to know, do we have a settlement around that has stinking high volume or a big concentration of volume in the last 30 seconds? And if it's T plus 2, that's going to matter a heck of a lot as well. Right? And it's why I talk to people about when you get settles on low, on volume, and those get underneath the market, and the market gets enough of a cushion underneath these look back, these rolling settlements, the market can fly to the upside. Why? Because futures essentially have shown us that everybody is on the wrong side of the trade. They're selling the lows to hedge off their stocks. And when we start to rally, they got to buy back futures. So does gamma matter? Heck yeah, gamma matters. Anyway, end rant. So this whole thing, this heads-up display that I've made, right, that I came up with a while back, I'm gonna send this chart book to Ticino. He's gonna modify it, make it look prettier, I'm sure, because he's the master, and go subscribe to his service. It's what I talked about an hour ago, maybe, which is he's awesome. Ticino's awesome. I have no financial attachment whatsoever, but I'm just sharing it so that you guys can learn. This is such a tiny group. There's 30 people watching this. That's it. 30 people. And maybe 300 people will watch this in a week. That's it. Right? The same people. You have edge. You're not losing some edge. My YouTube isn't going off the hizzy. It's not going crazy. Because people don't want to learn about this stuff. They don't really want to try and understand something more complicated than a moving average, right? And a 50% retracement, and a trend line, and a bull flag, and a head and they don't really want to understand more than that. So you have someone who's doing this successfully on YouTube, demonstrating I know my crap. I'm trying not to curse. Live. All you got to do is pay attention, think about it for yourself, and apply it in a simulated environment and see if it works. That's it. That's the only risk you have to do. I know it works. You guys should know it works. But I know it works because I talk about it on YouTube ahead of time all day long, and I've done it for years. Nobody listens. Right? So keys to the castle, all out in the open. But people will not adhere to something that causes them to have to think like it's a game of chess. Right? You guys ever watched that movie, Searching for Bobby Fischer? All right, it's about this, I don't know, 5, 6, 7, 8-year-old kid who's a prodigy in chess. And he goes to the park, and I don't know, the guy that stars in The Matrix as Morpheus in Matrix 1 basically is a chess player in the park. And he's watching this kid just play some random old dude. And the kid just has an instinct for chess. It comes to him naturally. And Morpheus in the chess movie, I don't remember what his name is. Morpheus in this movie goes to the mom, your kid used moves in combination, lady. Like, whoa. Like, He's just a kid, but he's using chess moves in combination to attack. That's a sign of a great player. Well, you know what? Chess is like, or trading is like chess, or chess is like trading. If you can use a few things, some confluence that really matter in the market, you can start to understand the game in a completely different way. Completely different way. But you have to know what are the things that are important. Right? Is it pulling and stacking or delta in real time on a footprint? Come on. If it were that easy, everybody would be killing it. It's not that easy. But is it important to do it? Is it important to do this? Sorry, I'm getting connection issues here, so I'm distracted. Is it important to try and understand the market in terms of the larger levels and then using these tools around larger levels? Around larger levels, T+1, yesterday's settlement, volume, right? There was volume here. Why didn't you short here? You would have got roasted, but you wouldn't have gotten roasted at T+. So they're already building the position here. They're building the position. You're like, well, I have no patience to wait. You will develop patience if you use a tool right here that is more important. So anyway, back to the whole chess analogy thing. What makes a child a prodigy and potentially the next Fisher is that he's able to use multiple ideas to attack. Same thing with trading. So get this whole idea of, I want to buy some $299.99 thing that does all the work for you, and all you got to do is sit back and make money. Look, if all these things worked, one person would buy it and tell all his buddies, and they'd have 1,000 subscribers. And in 1 week, all their edge would be gone. Because institutions are analyzing the way people are entering and exiting markets nonstop. And if you had a bunch of pleblito retail traders all entering the same way every day at the same point, they would run the stops. But T+1, T+2, settlement, it is what already happened. It's not some projected measurement of what has not happened. You're looking at actual history when you have settlement marked on a chart. You've essentially said, I'm putting an automatic volume profile on the highest concentration of volume for the whole day, every day on my charts. And then when you understand what it represents, the underlyings, and the whole story that goes with that, you can now plug in things like credit spreads, options. You can start to understand the way volume flows around levels. I'm telling you, people aren't going to tell you this stuff from Goldman Sachs or from JP. They're not going to tell you any of this. But it's real. It actually exists. So I'm challenging all of you guys to think about it. Look up stuff on settlement. Google, because I don't have the links read. I had the links on my Twitter from about 3 or 4 months ago. I don't know where they're at now. They're still on my Twitter, all the links about settlement and stuff. But people, the sharp people that added settlement to their charts and then started asking me about it on Twitter, I gave them all the links. Just looked them up for them. Here you go. Maybe we can talk about it sometime. I didn't hear from any of them. Not a one. Which again tells me there's no Bobby Fishers out there that I can correspond with. Even though I'm putting it out in the open, this works. Right? You're not using multiple pieces of confluence to attack the markets with. Right? Some of you Furus listening, I hope you start teaching your paid subscribers about this. Go read, go understand it, and start talking about it. I guarantee you a lot of people are not going to use it because they won't understand it. One. But you know, you'll actually provide value add service if you start thinking about and using things in the market that actually makes sense. You actually give them a value add. Quit using the same thing that everybody else is using to understand the markets. And you don't even touch the things that are most important. Anyway, end rant. Go subscribe to Ticino. You'll get this heads up display pretty soon. I'll send it. I told him I was going to send it to him this weekend. Maybe I'll do it tonight. I don't know. All right, I enjoy these YouTube things too much. And my family, so whatever. Haven't even been making any trades here. Ranting about T+2. You watching me entering trades is a lot less important than what I just told you, by the way. Might be more entertaining for you guys to watch me trade. But hearing what I just told you, you guys should realize you heard something that is profound and very important. And if you're hearing it for the first time ever, stop what you're doing and go read. Go learn about it. If you got questions, ask them publicly on Twitter. But read first. Don't be a lazy man or a lazy woman. Don't do that to me. Go read first, and then we'll have an intelligent conversation, right? So same thing I tell people about certain books. Read these books, then we'll talk intelligently about the market. If you don't read them, I'm not going to talk to you. And I'll know by the questions that you ask whether you read the book or not. And if you make that mistake early on with me, I won't talk with you again. I'll just say you're a liar and I'm not talking to you anymore. I won't even tell you. I won't even call you out that you didn't read it. I'll just, oh, okay. I'll shine you on and I'll move on. But for everybody else willing to put the hard work in, I'll talk to you. But I don't entertain fools that lie and don't actually put the work in. And the goal for me, you're like, oh, why are you sharing all this, Mike? The goal for me, maybe I'm going to meet some Bobby Fischer that understands it the way I understand it. They'll realize that I'm speaking truth. We'll become friends. You'll be a nice guy. You won't act like a jerk when you're not getting stuff from me, trading signals, like some of you've done, right? Ignoring me, right? Oh, you're no longer in Discord, so I'm not going to treat you the same way. You guys know who you are. And we'll trade together for years and years and years. And we'll make bucket loads of money together. And it'll be fun. I'm the same jovial person, whether I've known you for a year or 10 years. So I'm looking for a few good men and women to just trade with. That's it. And if you make money following a different system, awesome. Look at them cover the lows. You see that, guys? They're covering the lows again. This is exactly what I'm talking about. Inside day, see? Cover the lows. Cover the lows. Cover near the lows. See that? Why? Because all you retail folk are taught. New lows, breakout. Get short. So they get a cover into you. If they built a position up here and they get a cover, they'll spit it back down. If they're shorting wicks, if they're shorting rallies, they get a cover new lows. They get a cover into you retail pleblitos. This is how they do it. Why? Because you're all taught to breakout trade. You might still be right. You might still get your shekels to the downside. But But what will end up happening here, and this is why the markets move like this. Again, they gotta study what the majority of people who are trading are taught to get out, because they're big money. So they got to do what the majority. They got to play against the majority. If this spits down like this, and they're no longer supporting the move, what'll happen is you'll get a wick here. Oops. Get a wick here, and it'll go whoosh, right back up. And all of you guys who shorted this here will have to cover break even because of the rapidity, the velocity of that move. You'll freak out and cover break even. That's why this happens. That's why the E-mini constantly fakes out. So what are you doing? What are you doing since you know this? Do the opposite of what you've been taught all these years. And consider still the trend. Go with trend. So where do you short going with trend? Why do you think I have a 10 SMA up there? All right, so this is a 5-minute chart, okay? But if I go here, if I go and I change this chart to bar period, day, minutes, seconds, point and figure 1 dash, I don't know, 1 dash 16, right? One reversal of 4 points, and we apply it. Guess what? Ba, ba, ba. All right. You see this? This 10 SMA is ooh. This 10 SMA is still based on a reference chart that is for 5 minutes. Although it doesn't look like that right now to me. Just FYI, it doesn't. I may have broken something. You know, yeah, I may have broken something in here the other day. I made some changes to my footprint, and I think I broke that because this doesn't look like the 5-minute 10 SMA. But I do have it typically overlaid. This one's probably right. I'm going to change this back to 5-minute. But typically, that 5-minute 10 period simple moving average is so important that I have a reference chart and I have it always overlaid, even if I have a point and figure. That's how important it is. Ice at the bottom here, see that? At 39.60. You think they're going to go take that out? Probably. Probably. Someone's passively buying there. If you're in Thinkorswim, you have no idea that this happened, probably. See that? 1,000 contracts down here. They're doing an iceberg, which is where you have a single bit large order that reveals itself a little bit at a time. Let's see what the reveal is. 943, 100% negative deltas down there at 38.60. I think I said 39. Let's see what the reveal quantity is. All right, let's see. Sometimes when you hit that level, and everyone else realizes that they're going to sell it, and people just stop buying ahead of it, you'll see what the reveal quantity is. Connection reset by peer. Sierra chart, are you watching? Trying to screw with my connection? There they go. Below it, someone just shorted 100 contracts at 58.50. Let's see. Someone's shorting 50 contracts at 59.25. It's filled. You're like, how do you see that? MBO data. Market by order data. Big ticks. Big ticks. Look, see how this changes? Negative 3,000 ticks. And nice NQ tick. Negative 3,000. Goes to 3,500. This right here. When it hits 3,500, well, it's now below that. See, 2,700 right here. When it hits 3,500, this will light up. Bing! Brighter. Market's FOMOing even more. Okay, so let's go back to our TPO real quick. You're like, Mike, you're not addressing any of the questions in chat. It's all right. When I get on a rant, I just go for it. All right, remember what we talked about? Common to extend down. What did we do? We extended not quite 50%. Humongous initial balance, which is this vertical, very light blue line. All right, we could put something on here, right there, there, and there. So here we went, we'll call it 70% of the 50% extension. 50% extension of initial balance is just half the width of initial balance, which is this 60-minute opening period. Heavy trading that goes on. So we're now roughly 50-60% till extension, 50% here. Okay? And what time is it? It's 11:40. We have an hour and 20 minutes of trading left. Right? Market week. Right? We're running out of time, but this is about when the market may rally and do a little rule of three back to yesterday's settlement. Just saying. Like, what? The market's weak. This happens more often than not. What's cumulative delta on the, anyway? So the idea being, maybe we extend down and rip back up, and we have this nice little bell curve, right? With right now volume being here. Maybe. I don't know. I mean, this is still balance. Anything can happen. But you see, we're planning ahead, right? For the possibility of a rally against an intraday complex retracement, which is what? 2 legs to the downside. Now, if you read The Art and Science of Technical Analysis by Adam Grimes, you know exactly what I'm talking about when I say complex retracement. And I've, for years, told people, go read that book. Why go read that book? You guys follow Adam Mancini? Futures trader with, I don't know, 100,000 plus followers on Twitter. You know where Adam Mancini learned from? Adam Grimes. Go read Adam Grimes' book, The Art and Science of Technical Analysis. Such a good book. He'll talk about Monte Carlo in there. He'll talk about risk. All the stuff I have talked about in YouTube. Some of it comes from that book. Anyway, let's get rid of this. So we're extending down right now. We're extending down. The market is... Gotta get this. Da, da, da. There we go. Get this over. You know, in Linux, these windows snap so beautifully. Makes it easy to move stuff around. All right, so not a whole lot of trades. 2 trades, so 7 trades total. But positions, maybe 1 or 2 positions here. 2 positions here. I don't really care about the micros right now in Trading Live. Don't really care about it. Anyway, big balance area right now we're in. Right here. Here to here. Just spit my consciousness here. Alright? Big balance. What do we know about balance? Sometimes we doubles. Right? There's a trend line here. That trend line comes from it's the current daily lower trend line. So that is where it comes from. So, because of 50% extension, because of the way the market's already moved today, my prediction would be the market extends down, maybe somewhere here, here, something like that, maybe gets that daily trend line, stops, and then we make a reversal. Like, what? Or it even happens now. I don't know. That would be my prediction. But reversal at some point here today. That's my prediction. Simply probability, my friends. That's how I calculate it. Simsum, yes, he does. I talked about it a few live streams ago. Adam Grimes has, God, what does he call it? Been a while since I've been there. But he does. He has a free course that he claims, and I agree with him, it's worth $15,000 to $20,000, and he'll teach you everything. It's very in depth. I cannot believe it's free. I can't believe it. But most people, again, they won't go through it because it's too in depth for them. People want simple. Give me an indicator and let me make money. All right, great. You know, the more that's promoted as viable in the trading community, that kind of thinking, the happier I am. Because if that's my competition, Yahoo, be making money for a while. Now, what you have to keep track of is what is the common flavor of the day in the market, right? Market profile got so popular last year before, so popular. And so now you get all these unfinished auctions, unfinished poor lows, right? Singles, and traders just start going long for, return to singles, or short, return to singles. And the market would punish them repeatedly. Then people got a little smart and they said, it might happen tomorrow, might happen the next day. Then the market would go further than what people could handle because they're on margin. They get stopped out, and then the market would go do it, and then they go pat themselves on the back. I lost money, but I was really right in my idea. Well, maybe change your idea that day. If too many people think about that, it looks like, and you think you can see where people are shorting into the hole and now they're trapped, do the opposite. That's why somebody the other day was talking, they had a bad week. I won't mention their name, Indigo. I was like, you could learn a lot from your failures from the last week. Because maybe your instincts are all about what you've been taught and what everybody else is doing. Again, if you guys are all learning off of YouTube videos, and I realize I'm a YouTube video right now, but if you're all learning off of YouTube videos with people who have 50, 60, 70, 100,000 subscribers, remember, everybody that watches that, and if it's rinse and repeat and it's just a flashy looking YouTube that's presented well, right, with big splashy, I made X amount, right, they're not doing it live like I'm doing, but they're just doing a nice production and making it look good. Realize if you're watching that for your education, others are as well. And remember, 95%, I'd say closer to 98, 99%, especially in futures because it's all more levered, right? Being higher leveraged. They're all watching the same thing, entering in the same place as you are. So they're all putting stops in at the same levels. So again, I said this yesterday. If I get to a point where I have too many people, then let's say it's 50,000 people actually taking trades that I suggest. Number one, I won't do it. Number two, fade him. Now, I'm not even close. It's not an issue. But what I'm getting at is you don't want to do, regardless of whether you implement that or not, the takeaway from what I'm telling you is learn from that. That's why CNN Fear and Greed and Sentiment, right? And we look at historical lows for counter trend trading the masses, the Kramers of the world. That's why you focus on that. But how many people do that with technicals, right? If 85% of people are price action traders, do you think you want to fade some of that when it's so obvious and it lines up with the larger level? Nod your head yes. That's exactly what you want to do. Right? And when I say higher levels, again, just giving you education here, check it. First off, we'll get rid of this. Erase that. See this? You probably can't. It says 326. It refers to 2021. BBWC in parentheses. No, BBWC area. High volume BBWC. Now, this has already played out because what? Look. Well, you have to look at overnight price action. The first touch of that area produced a bounce that had all of FinTwit bullish. Look. Oh yeah, we're saved. Look, everybody, we're saved. Now everyone got bullish up here. Look, everyone. Oh yeah, yep. 39.50 handle. Oh yeah, looking good. Everyone's tweeting out. Now, what should you be concerned about? Catching 300 points on the E-mini, or catching 20 or 30 points on a 5 to 10 hour trade off a big level, and catching it the first time that you recognize shorts are trapped there, all the way back from 2021. You're like, wow, that's too far long ago. No, it's not. People hold positions for years on stocks. Years. And they will cover the area that's high volume where they shorted. They may have been adding to that position from that initial position for years. Look at the Teslac, the Tesla bears. These people have been holding shorts for years on Tesla. They will short those high volume, highly concentrated areas, and they will cover them for break even because they may have been adding on the way up, or they just may have been holding that position saying I'll leave it alone, right? And it's a 2% of their portfolio position, and they're fundamentally short Tesla. They don't care if it goes to 1,000. They'll buy calls to offset it short term, but they'll just hold it, and they'll hold Tesla short for 5 years. So these levels matter. But I already, on weekends, I found all those little levels and recognized why the market's going to be bouncing off that zone, BBWC. And I called it a whole zone. And it stays on my chart as a whole background for that zone. Right? Whole background. You know what this one says? It's already played out. Why do I keep it on my chart? Because it reminds me what's there. 321 to 328. Naked VPOC and VPOC. So naked volume point of control and TPOCs. Multiple. It reminds me what the market did there back in 2021. And so on a larger time frame, I need to be cognizant or mentally aware of the fact that we're getting into a territory on the daily time frame where markets may take a few days to bottom or something like that, but eventually they're going to bounce. So I'm monitoring the daily time frame. That keeps me out of the mentality of, we're trend down. I'm just going to keep shorting and shorting and shorting and shorting. No, I start to adjust my bias as we come into these areas, and I say, okay, we're getting into my daily targets. Now I'm looking for a few things. I'm looking for some capitulation. I'm looking for momentum loss. I'm looking for interested, really big buyers who are scaling in. That's what I'm starting to look for. I'm monitoring sentiment on Twitter from, again, like I talked about yesterday, the few people that I follow. So I'm really aware of how their sentiment changes. I don't follow 500 people because I'd never be able to follow it. But I follow a few people And so I'm really aware of their psychology and how they talk. But I respect them all. Healthy respect for everybody I follow. And so I'm able to track sentiment because I'm very familiar with them. Now, if I had some sort of AI that I could crawl all of Twitter and put a score to it, great. But I don't. So I make do with what I have. Anyway, not a lot of trading today. If you want to see me put a lot of trades on, go watch my last 4 live streams. Probably did 120 trades each day on the micros. And fortunately for some of you guys, I demonstrated profitability on each of those days. And I'm not going to be profitable every day on live stream. That's just unrealistic. It's not how trading works. If someone's only profitable every day and they're recording it and uploading it later, they're lying to you because they want you to think they're a hero and they're never wrong. BS. Run for the hills. Again, find some trading service if you need help. Find some trading service that demonstrates it live every day and demonstrates profitability live every day. Not hindsight calling every day. Find somebody that demonstrates it live. Pay them. Pay the person. But don't pay somebody that's giving you hindsight trading tips with their system. They're curve fitting everything. Don't be a sucker. Trading is about the hard right edge of the chart. You guys know this. Some of you know it, some of you don't. Some of you think that these people out here really are great traders because they showed you an after the fact recorded chart. So anyway, I need to close my window. It's getting hot outside, so I'll be right back. After these messages, we'll be right back. Yeah, baby. All right. Time to analyze. Enough ranting. Jeez. Some of you need to hear these rants, though. For your own sake, you need to hear them. Because there's not very many people that are going to tell you what I'm telling you. Right? And especially, I keep stressing every day, follow a trading group that shows you live trading that is good, not after the fact. So, I used to be part of a Discord, right? And you get in these groups with people who want to call the market in real time. But you know what they do? They don't call it ahead of time, like a minute before it happens. The market's moved 7 points, and then they tell you, I'm long from, I don't know, let's see, right now we're 11,715, NASDAQ. And we popped to, 11,725, right? Or we just popped to 720 real quick. They say, it's a few seconds after. I'm short 11,720. Oh, good for you. 30 seconds before it was there. How convenient. You never hear them say, my plan is to short 11,720 because of X and X reasons. A little bit of ahead of time, right? So you're paying for their service, just make sure they're willing to share their live screen with you. Sometimes, on certain days, so that they can demonstrate that they know what they're talking about. You're like, but nobody does that. Well, why do you think very few do that? Why do you think very few do that? Because there are very few consistently able to teach and explain live why the markets move with the way that they move. So, again, my advice is not everybody's bad. My advice is Go find someone that's willing to do that. That's it. That's my only advice. That's your filter, if you will, for BS, for furus. The filter is make them show you trading live. Doesn't matter if it's a sim. They can do it on sim. They can do it live. If their panties are too scrunched up in a bunch, that's fine. They're too afraid to lose money, fine. If it's on sim, at least they're doing it live with what they're teaching, their methodology. Doesn't matter if it's sim. Now, are there little reasons why sim won't work live with the live trading account? Yes, there are reasons. Because these algorithms, if someone's claiming to do 40 lots, 40 lots will change the way the markets oscillate in real time if they're entering with 20 at a time. It will change it a little bit, especially if they're scalping. Okay, so, but 1 or 2 lots or 3 lots, that's fine. Paul Asmar is awesome. Yes, Quan, my Discord is gone. It was a good run for over a year. We had maybe 1,500 people there, and it was cool. But again, I was the one responsible for it and whatever was posted there. Ultimately, as my good friend Zip told me and reminded me all the time, Mike, you're ultimately responsible for what goes on here, so you got to monitor it. So, and it became a little bit of a thing. I had moderators, but still, I come back to, I just couldn't keep myself out of the Discord. That's what it came down to. Too time consuming. And YouTube, I can just cut it off, right? I'm not live talking to anybody, so I don't get sucked in for 3, 4, 5 hours a day, right? So I'm a little bit of a trading addict, and so I'm in recovery. Oh gosh, but yeah, I have mad respect for Paul Asmar. I've watched a bunch of his videos, and I just like that. I like him a lot. Yeah, I don't know about the pit. I don't, no idea. No idea. I'm not going to get into a, yeah, great, no such name. That's real trading, But yeah, I don't know about the guys at the pit. I don't watch the YouTube. I know that they exist out there because the pit, they did what was it? They did a webinar for Orderflow trading with Sierra chart, and so it showed up on the Sierra chart board, and so that got me clicking. But quite frankly, I don't pay for any services on how to trade. I never have, and I know how to do it. So it's not appealing to me to be part of a community where you have to pay to be involved in the Discord or whatever it is. I would like to be part of a community where I'm not the boss. Here comes the potential rally. I wouldn't mind being part of a community where I'm not the boss and where I could just sit back and be a good soldier, come in. But I don't want to have responsibilities at all associated with it. And that's problematic for some. There's ice up there. They're gonna break it. Here it goes. Watch this. How big is the ice? Ice, baby. It's 1,090 contracts plus whoever's shorting there with that player. So let's see if they spit it out here. See that on the E-mini? Oh, back to 300. They're gonna pop it. There you go. Few stops up there, not much. Few hundred contracts. See how the algos sold back. So here's something that's interesting. You should take the time to learn this. These were all zero prints here, okay? And then right below it, they're not zero prints. There's absorption and quick selling, right? And when you see that in real time and the market comes right back here, you can market sell this area here because they're aggressively selling this area. So you can scalp, but you got to think quick. 3-point stop, 3-point profit taker, and you're out. How fast can you go? So if you have a sell market button in Sierra chart, it should be a sell market button with a, well, I have a 3-point take profit, 2-point stop loss button. So I'll hit both of those quick. Bing, bing, in and out. But again, it's how fast can you go, right? That's what that is. So that's a setup. Hard to do when you're talking on YouTube, guys. You're like, excuses. It's all right. Go watch my last live stream. I did it without talking, though. In a lot of those scenarios. And then I explain it 5 minutes later after the fact. Because what? I can't talk as fast as I trade. It's impossible for me. All right, back into the volume node. This one, so we ran all these stops. Here's the rotation. So these stops were already run. Now this candle here, there's a little volume here, but they iced out here and sold here. I would say this is probably going down. Down, down, down. It looks like they trapped you a little bit, but that's the short term view of the price action. The higher term view is that it's 12 o'clock or 3 p.m. Eastern, and that we have this nice complex retracement. But we are now, as I mentioned earlier, we're running out of time to rally into the close. What do you mean by that? It's typically, if you have a complex intraday if you have intraday, you have a complex retracement. And what I mean by complex retracement is this, right? With the trend line down here, and now you have 1, 2, this V reversal, and like say the market was going like this, so it's like a bull flag type thing. This kind of reversal should happen at 2:30 Eastern. So it gives you 1.5 hours to make this move into the close. And the faster it makes the move from here to here at 11:30 or 2:30 East, 11:30 Pacific, 2:30 Eastern, the faster it makes the move from here to here and leaves the last hour, power hour, for this, the higher we go and make new highs. The higher the probability of going and making new highs into the close. So as we run into, you see on my chart, 12:05 here, and we haven't done that, the probabilities of such a move diminish, which is why I was talking about it back at 11 a.m. my time, right? 2 p.m. Eastern. I was talking about the potential for this, and now I'm saying I changed my mind. It's timing. So now I'm saying we haven't made the move, and short-term action says they got the shorts. There's a big player here. They really wanted to sell it above this ice. They're, looks like, covering out down here. You see that? And now I think it's more probable that we go down than up. But is it a high probability play to short here? No, I just simply think it's a higher probability to go down than up. If I'm wrong, fine. Am I putting on risk here on micros? No, I'm not. Because I don't think, because of the daily time frame and the sentiment on the daily, I don't think continuing to short here without it being a crystal clear setup is something I want to put money on. So I'm totally happy to hang out here and just talk market theory with you, which is why I'm doing it. Earlier, I made money. So I said I was getting on the live stream, and I was 25 minutes late. You know why? Because I shorted this. Oh, shoot. You can't see it. Because here, let me get rid of all this garbage. Because I shorted this area here. And I took that on ES. That's why. I was delayed. That was a great move. But all this here right now, it's not a great area for me. I think it's higher probability we go down, but I don't think it's a great area for me to put on risk. So I know where to stay out. Now, are there other things going on? Yes, there is. There is this. You see this? This tick thing? Here we are, negative 2,800, so it's no longer lighting up. This just hit 3,500 here when we sold here. So the broad market was selling from this level to this level. Isn't that interesting? So a sell program turned on and sold a whole basket full of stocks here. That's what that is. And the indexes move. Whew. And they move with ferocity. So that's what that is. That's all it is. Anyway, so I am looking at other things, right? I'm looking at the dollar here with an inverted head and shoulders. You see this? I noticed this inverted head and shoulders a few days ago. Right? Head, shoulder, consolidation. I said, oh, breaks this level, it's going to go. That was already part of my trading right here, right? You see that level? We've broken out of it again. Go look at the daily chart of the dollar. Strong uptrend. Do trends end? Sure they do. But I already had an idea for downside. Then you go couple that with what? My weekly weekend analysis, and you're like, oh yeah, it kind of does all start to make sense, doesn't it? Sure. But again, multiple chess moves, chess pieces, used in combination to what? Understand the market, attack the market. So it goes back to the whole searching for Bobby Fischer analogy. Anyway, ICE up here. ICE. Oh, and you know, you can talk confidently about the market like you understand it, and then you get humbled. You get served up. So maybe I'm a little juiced today because I had a 100% win rate day. Maybe. But the fact that I'm talking about it means I am still aware that it happened to me. So humble pie is right around the corner. Anyway, when you start trading a while, you'll start thinking about all these things when you have good days. You'll be like, man, I might just get really humbled. I got to be aware of my psychology. My rose-colored lenses are on for my own analysis. I think I'm going to be right all the time. You know what that means? Trade smaller and get humble. Because the type of thinking where you're overconfident leads to positioning far too big for your britches. Right? And that's when you get absolutely smashed, is when you take too big a position. And that kind of mentality can cause you to ignore your rules. So that's why, you know, okay, maybe I'm a little confident today because I had a good day, but it's also why I'm playing micros now. And I'm saying, I'm done. Because I recognized in myself something early this morning, which is, damn, I'm on fire today. And I feel good from it. I feel great. And I've been in this position 1,000 times where I then take full-size positions after I'm on fire. And my hands just start clicking because I refuse to be wrong because I haven't been wrong all day. My brain knows, hey, you've been right all day. Your bias has been great. So your brain actually tells you there's no risk in taking more size. You know why?
Because the probability of you being right based on, this is your brain talking, the probability of you being right based on recent events is very high. Because we have these reptilian stupid brains that have like a few hour window about confidence. Okay? And so our brains go, you're a god. You're a trading god. Go ahead and take risk. And that's why the casino always wins, because the casino doesn't care about that. You go to a casino, they're always winning. Why? Someone goes on a hot streak, keep playing. Keep playing is what they say. And play bigger. And then you give it all back, because it's a matter of probabilities. Right? So, play the same size. If you notice your little reptilian brain starting to buzz and shake and get excited, tone it down, cut it off. Realize that as an animal, you are subject to your evolved little lizard brain. Now, if you don't believe in evolution, that's fine, whatever. I'm making an analogy, right? Call it whatever you want to call it. You're subject to sin, whatever you want to say. Okay, whatever, right? You're a broken human being, right? You're imperfect, however you want to say it. But that is what we're subject to, ego. So cut it off. Buyers up in here. Buyers. Really interesting. Really interesting. So some positioning happening here in short amount of time, right? We had it here, right? We had the big buy bar into ICE with the high contract. We have it here again, right? We have passive buying here, passive. Now we theorized, we put our thinking caps on for short-term rotations here. But now we're thinking about OTFs, other time framers, larger time frame buyers, right? I'm thinking about daily time frames now. And now I'm seeing, hey, remember, for every buyer there's a seller and vice versa. But now I'm starting to see some aggression. So do you want to get in front of this right now? I probably wouldn't, because now you have someone who's bought here on some size. So when it's wrong, you double balance. And this is a breakdown level up here. So as a scalper, now again, we're getting closer to the close, right? Here, look, broad market. See this? Plus 3,000 ticks. See that? Plus 3, boom, gets brighter. 2,000 ticks, less bright. Tells you there's a broad market move to buy here. So anyway, there was a sell program here. We saw it. But it didn't get below the lows even. Now we're breaking upside. So all this balance here, all the way above here, they're selling. They're de-risking before all time. See that? De-risking. And it goes back to me pointing out that they're de-risking here into highs is just to say, how do they do it? How do they do it? Do they de-risk at the top? Maybe they short up there. Maybe they take a position. But they de-risk into or at new highs. That's how they do it. Anyway, so you see this 2,000 tick. I'm actually just looking at the comments here for the first time since, I don't know, this stuff's not timestamped. The last one I read is about Paul Asmore, so I'm just reading comments here, guys. Da, 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 da. Kwan says, Mike, I've seen people get fed up on Twitter, Discord, YouTube, and deleting the account. I might, Kwan. You never know. I can't tell you what I'm going to do in the future. I won't get rid of the videos. If anything, if I made them all private, I'd save them for someone that I loved or something, my son. But they're all downloadable, so you guys want to download them? Fine, whatever. Likely I won't delete them. Da, da, da. Simsum says, I oscillate between being neurotic and overconfident. Okay, so that's what he was saying while I was talking about that. So anyway, what I was talking about earlier about the short, I didn't take the long, oh jeez. Jeez. I'm saying, do you take the short when we start to break balance? No. That keeps you out of a stupid trade. Now we're into resistance, so I think I can short it. But maybe they're just hitting all my bids. A little bit of size above. Plus 3,000 ticks. At an important level. There's some liquidity right below us. They're going to go hit it. It's at like 90, or I'm sorry, 94. There you go. $25 more. Yay! I paid for some fresh vegetables in this high inflation environment. Probably like 2 tiny little bags. Anyway, there's a little bit of... Oh god, I don't have my brackets on. Well, that sucks. Alright, let's go. We'll take some risk here. Maybe we have a losing day. Maybe we do. We have liquidity above us at 3,900 now. Took a chance. We're going to get roasted. It's too close to the close. So what? You got roasted. Oh well. You took defined risk and you got roasted. It's okay. Who cares? Try again. Shorts are obviously nervous now. You see it in the price action? That's okay. Now, all these zero prints down here into 38.88, those are an issue. That's bad structure. Are they look right here, bit of orange. Now this is breakout, more breakout. Are they nervous there? Maybe, I don't know. But can we make some money here? Sure, we're making money. Ba, ba, ba. Oscillate. Now we're going to oscillate back up to the volume node here. See that? Those are the ones that are a little nervous. See? Okay. Stopped out. Whatever. You lose 2 or 3 points. Whatever. It's a little tight. it is. 3,000 tick, so you give some back. Fine. All right, there we go. Give some more back. Put a stop in. That's fine. You can manually mess around with it. 3,000 ticks. I'm wrong. I'm wrong. That's okay. Still think we're gonna go break highs. Anything can happen. And anything does happen. Look. Alright. Where's the liquidity at? 39.10 and 39.05. Alright. So that gives me 1R. Right here. And here. And then what am I long for? Alright, there you go. There. Alright, break even on my stops. Fine. We're long 3, we only got 1. Fine, who cares? It's all good. Long 2 now. Move it into stop. Move it into profit. Alright. Now what? Long 1? Alright, let's keep the highest one. Right up there at 39.10. There's liquidity up there. So let's see. Let's see if we hit it. I think we're going to hit it, but we'll see. But you see, I could play this quickly, right? And say, okay, above, market's showing a little bit of strength. I'm wrong. Fine. All right, I'm out. I'm flat. Okay. There you go. 42 points. Micros. These are micros. MES. Rainer. Good day, by the way. The Sierra chart heat map, which is market depth historical graph, it's never worked perfectly for me. I've never talked about it on Sierra chart support board, but I've seen other users complain about it. And I think I understand the issues involved, but anyway, I'm not technically proficient enough to speak to it. But in other words, it doesn't update fast enough, so I like using the DOM. So, like this here. Let's see. I'm looking at a DOM, right? There we go. Hold on. Oops. Trade. Right there. So here's my DOM, right? Depth of market right there. Spit it back out, back to the 0 print. Anyway, a lot of volume up there, right? Didn't get anywhere. And big ticks. So if you see the ticks that are happening right now, that big heads up tick display is going, phew, it's just like bing in your face, bing, big ticks, almost 3,500. So big sell program. Big sell program. So when are they done? Oh, I have my bracket off. And we'll change this one. 2. Wah, wah, wah. Why do I go long there? New 5-minute bar. You can scalp it. It always doesn't always. It often retraces on a new 5-minute bar. It might go all the way up to 38.97, and then I'll just look stupid for taking a few points. So this is now resistance. Well, it's near the close. Oh, can I get filled? There we go. A little bit more stops up here, potentially. You gotta consider the time we're in, right? Near the close. Might just give it back right here. We'll see. Might just give it back. Because you guys can't see it. There's a 1,000 volume chart here. Yeah, this is a bad time to trade. We're out. This is a bad time to trade for me. No trades. Here's what I'm looking at. I'll show you. You see this? Normally, if it was middle of the day, you could take this trade for a short right here. And it would do this almost every time. About to there. But being that we're so close to the close, oh, there it goes. It just did it. Bummer. But being that we're so close to the close, I realize I shouldn't be doing that, because they will sometimes often just buy this right up back to this level, which is resistance here, right there. But I got the move, and I decided against it because of time of day. So what I'm working with here is my knowledge of how this will act as resistance with this blue bar and with this pullback. But I'm working with the knowledge of the fact that at this time of day, I made an instinctive call to get short here against this, but I didn't consider that it's this time of day. So we're now at resistance normally, but into the close, we're now in M period. A lot can happen, right? So when Goldman and JP Morgan decide, hey guys, we're buying today, your resistance levels do not matter. So anyway, today we are getting the complex retracement. I'll show you guys real quick. And it's happening late in the day. So don't I look like a fool? Yeah, so what? You play the probabilities. If you guys were around from earlier, right? I talked about essentially this rule of 3 that was setting up. See all these lines right here? You see that? Rule of 3 that was setting up. Here. There you go. So here, here, here. And I didn't like it for timing. Well, now it's happening. So now resistance is first VWAP, right? So because you guys don't have this, and I call this TD Ameritrade VWAP up here. TD VWAP. This is the VWAP based on what TD Ameritrade will have as VWAP. Okay, so it's that green dotted. That's the only one that I keep track of every day. All the other VWAPs are useless by and large. Well, for you, some of you VWAP standard deviation traders, you would disagree, and you're right, but I don't use those methods all the time every day to trade. I got my own different things, but that's the one that, using my understanding of the market, makes me the most money and the most sense every day. So anyway, we have this complex retracement that I told you guys all might happen, usually happens around 11:30, then bing, you have time. Well, it's happening here 30 minutes before. And we made that rapid move in a short period of time. And now we have allowed for a move like that in the market. We have time for that. And the party starts above settlement. But will that be resistance? Settlement? The settlement line? The big orange one? Sure. Will T+2 be massive resistance? and it sits right below 4,000? Yes, it will. Mock my words. You guys know on my TPO charts that I segment them for the overnight session. I have what's called USA, so RTH, which we're in right now. I have USA 2, that's this blue line, it's an hour. I have what's called Asia Open, even though it's not. That's the new daily bar. I have Japan Open. Oops, can't go any further. And then I have, right at 24, European session. Here, let's scrunch this up, then we'll be able to see it. There you go. Why is that useful? You guys are going to learn some things today. Because look at the volume at the European session. It goes, no, bing! Spikes. Big movement. Scalpable. Right? Look at Japan. Bing! Right? Look at New Daily. Bing! Volume spikes in nearly all of them, or movement. So much to learn about trading, guys. If you're like a new trader, it's so fun. You get to learn for a long time. If you're a Sir Isaac Newton type, curious about the world, and you love learning, trading is for you. Trading is for you. If you're a Carl Sagan lover like me, trading is for you. Because you know what? Trading, you will be learning non-stop until you stop trading. If you think it just ends, it doesn't. You just keep growing your brain, and it's wonderful. Anyway, let me fix these charts before I jack it all up here. Look at this bull flag. Bull flag. Anyway, let me get rid of some of my lines here. These are old lines. But I gotta think about it very methodically. Like, am I getting rid of a high time frame line? No, I'm not. Okay. Let's see. Right. So you see the market by order? Those are large orders resting in the book. So this is the bid side, this is the ask side. But all this MBO are the large orders in the book. Hey, 600 lots. That's 600 lots. You might see it as 650 on the book, but that's a single order of 600. 410 now, right? Everybody adding to it. I want to buy with that guy. See how that works? And then all these sucker shorts covering ahead of that liquidity. What does that tell you about who's positioned here? Some shorts, short term. So they're like, oh, dang it. And they're gone. The 600 lots are gone. They didn't get filled. And the market, whoosh, comes back to it. What do you think they're going to do? They are going to buy that zone now. You know why? Because you can't spoof on the CME. You will get reported. See the lot? See that? Look what happened. Oh, what? Look. See the 700 right there? They bought. Why? Because they realized they couldn't get filled by just putting a big fat order on the book. They did it differently. They didn't spoof, guys. They still, when you came back, they still bought. Can you read it that fast? Train yourself. You'll figure it out. You'll get there. That's why I have my DOMs up, because the DOMs give you a nice, fat, sweet-looking view of the market. Look at my time and sales, right? These are aggregated. This time and sales is aggregated to show me everything hitting on the book, and it's aggregated by time. Oh, oops, shoot. I have some windows down here. I need to get this back where it needs to be. get too many screens. I've got 4 big old screens, guys. This is not fun for me to move stuff around. Do you go long here? No tail here. No tail on this bar. I guarantee you people want to go long here. There's the tail. I would not go long on that. I want to go long on a bar that maybe closes at lows here and then has a tail and then rips. Because I think about all the price action-y people. I think about you. Do I think this high gets taken out here? Well, I do. I do think that this high is likely to get taken out. But do you go long right here? Well, a lot of traders get their signals. They will. They'll see these, this, and this all become signals as it breaks above. So you see the aggression. They hit the ask. Hit the ask. But for volatility, all these guys are going to get stopped here. Hence why the dude the other day that has a 3-point stop or 2-point stop, and I was like, oh no, look at ATRs, look at volatility to determine your stop loss and play with smaller size. Unless you could really read the price action well and know at the point where we either go or don't. But now you have to define more variables, and so your probability of success goes down unless you have really good edge and you read the market really, really well. But most people don't. So keep a little bit wider stop. Be right in the trend, especially if you're a newer trader. Give it time. Time. Anyway, I think we're going to break this. There's commitment to buy here, right? You see this? That's commitment to buy. That's what that is, right? That little volume note is commitment to buy. And you have to be aware. What's commitment from retail traders look like? And what does commitment from institutional look like? Relative volume size, right? Above these 2 volume notes. Okay, see how it gets orange here? So anyway, if you're committing to buy here, and they are, where are you committing to? Stops above this wick. That's what you're committing to. You want to see what's up there. Now we figure out above here, how quickly do they sell it? Is it weak or strong? Which side is weak or strong, right? Short-term price action. A little ice up there. See that? 663. So the smart players, new highs, they're de-risking on ice. See that? See how quickly that happened? 663. So if you took remember we had a 600 lot down here, you got out ice here. You got out most of your position and then maybe just sold the rest into the market. So you could take 600 lots here from, I don't know, wherever it was, 900, all the way to 10. You took 10 times 600, but you took the high probability play. At where? After all of this move into a counter trend rally, right? And so now all the folks that are like, oh, going high here, they're all feeling massive pain. So if we spit back down here, we'll probably come all the way back down to 3870 something. Why? Fail breakout. All the longs are puking now. So what's your trade? What's your trade by identifying that? Put on defined risk and go with the flow. How quickly can you see that this is a potentially fail breakout? You see it way up here at 3903. So here we are at 93. 5-point stop, you've taken off 2R. You can hold the rest for the puke, but it might be a little bit bumpy. That's okay. Anyway, we're getting close to the close. 15 minutes. This is not my time to trade, guys. I'm teaching about price action stuff, but this is not my time to trade near the close because of aforementioned reasons. JP Morgan, Goldman Sachs, they decide to buy, you may be standing in front of the freight train. I get the F out and stay out. because we are peons. Rainer, I know, Rainer. That's why I want to stay in touch with you, my friend. Send me an email, Rainer. Do you have my email? Maybe one of these days we'll get on whatever platform you want to get on, and we'll talk about markets a little bit and have fun. I noticed it right away that you and I shared a kind of a common understanding about markets. Took a pizza, yeah, man. Now, did you take a pizza with an A, or did you take a pizza? If you don't know what I'm talking about with a pizza, then I feel sorry for you. You're not a New Haven style pizza guy. Oh, can I crack myself up? Let's see how much delay is on this chat. I don't even know anymore. I use MBO data from Denali a lot, Jonas. A lot. Sierra Chart, you can thank me. I'm not trying to shill your service for any benefit of mine. I'm not. But yeah, MBO is good. For a long time, I didn't need it. But when I... You don't love pizza that much? I do. I think it's delicious. But I don't eat it anymore, so... Oh, sheesh. Stuff got delivered, guys. I got more espresso stuff. I'm modifying this Gaja Classic Pro. All kinds of stuff. 9-bar pressure, 6-bar pressure. Bottomless portafilters. I already had that for a long time. Distributors, right? Levelers. Stirrers, espresso stirrers, declumpers. I've got that thing providing or giving me sweet looking tiger stripe shots. I should take a video and put it on Twitter. So beautiful. But I'm just constantly tweaking it, having fun with it before the upgrade to the next machine. But this machine is it's good for me for now. Learning to be a barista, and then once I get it down, you invest a little more money for something that's a showpiece. Beautiful. But what was I talking about? The old Discord does not exist, Jonas. I would love to be able to point you to some Discord, but I don't. I'm not on any Discord, so I can't speak to what's quality and what's not. Others here can share various Discords, as long as you're being somewhat honest about it and not the furu from the Discord. Fine. If you start talking like you're someone who's got something to profit, then I'll just put you in timeout or something. But yeah, espresso. I had 2 of them today, actually. 2 espressos today. What was I talking about, though? What was I talking about? Rainer. That's what I'm talking about. Email me if you have my email. Or if you're on Twitter. Oh, cool, Rainer. I'll open up my Discord DMs for a little bit, and you just tell me what your DM is. Shoot me a DM real fast. I'll open it up right now. That way we stay in contact. This is not, I'm going to bug you. It's not that. I'm not going to bug you, but I do like your perspective on markets. Uh-oh, Goldman. There's the, what is the, MOC? What is the MOC? Oh yeah, you know me. So some retail players are having a bad day today. Guess what? It's about to get worse potentially. They are buying. Oh no! Yeah, well. Context, baby. I was pretty clear about long-term positioning. Not trying to say I'm right, and I'm underwater still a little bit on my long-term positioning. But with profits made from this and last year, I've been buying stocks, guys, in this decline. What? You idiot. Yeah, well, guess what? Bull markets, we're in a 100-year bull market. You buy in declines, you sell in uptrends. That's just how it works. So you get a big decline, you start to buy. You get close to 20, 25%, 30%, 40%, 50%. You buy and hold. Buy and hold in a 100-year bull market. You heard it from me. Not first. This is old news. Not crypto. Crypto is a baby thing. I'm talking about the stock market. You buy and hold. Inflation is going to make your stocks go up forever until the end of the world and the end of our monetary system. But don't listen to all the Sven Heinrichs of the world that have hundreds of thousands of followers because they're always appealing to everyone who's doom and gloom. Those guys, the clock is right once every 24 hours. MIM buy. Top step, 1.4 billion. Hey, 2 point something billion, we sell a little. 1.4 billion buy, we go straight up. Does that tell you anything? You know why? You know why? Because we sell on big volume. We rise on smaller volume more easily. Why? Because big money buys declines. That's how it works. That's why when the markets sell on volume, you can be sure someone's passively taking it from you. You might be right for a few days, but they're going to be right in the long haul. Anyway, saying this to a bunch of day trader, future traders is meaningless. I'm not talking about this moment. I'm talking about the bigger picture. Whatever. And you could be in pain for a long time if you decide to invest right here, right now, and go all in. You could really get hurt. Anyway, I'm going to open up my Discord DMs to Rainer. And hold on. I don't even know where my settings are for turning friend DMs off. Oh gosh. So anybody who's a friend of mine already can DM me. Let's see. Accessibility maybe? Enabled accessibility. Okay. Nope. Nope. Privacy and safety. That makes sense. Allow direct messages from server members. Sure. All right. Who can add you as a friend? Everyone. Okay. Look, I'm only going to talk to Rainer right now, so anybody who's trying to get and start a Discord thing, if you're not Rainer, I'm not talking to you. So just don't spam me, okay, please? All right, Rainer. Rainer, can you... Amazon guy's looking in at me trading right now. He just delivered something. He's like, is that TYP? No, he doesn't know who I am. Rainer, what's your Discord, man? Can you... Are you willing to do that here on this live stream? I'll delete your comment so that it doesn't show up um, in the recorded stream. He's looking for your Discord. Oh gosh, 12:55. You guys want to see the settlement thing print? Again, you can get this from Ticino Trader. Go. You're gonna have to do level 1, but you're gonna get it from him in a few days. Go subscribe to Ticino. I have no monetary interest at all with sharing this chart book with him. He's simply the Sierra chart god for chart books, whom I worship. So I'm more than willing to share a chart book with him, not with anybody else. Rainer, I don't have DMs open on Twitter. Jeez. Rainer. ZM futures exploded. Jonathan says, I wish to build a chart book for myself one day. Yeah, man. You got this. Ticino Trader. There you go. Like that. Like Ticino. Anyway, look at the ticks. Buy programs. Bing. All right. T+2 above us. Look. This is... Anyway. It will be T+2 after today. Right now it's T+1. See how it's orange? It's going to turn into T+2. Right at the close, it turns into T+2. So it's yesterday's settlement. What did I say? That's going to be resistance. Resistance. You see all the folks selling in here? It's now resistance. Now, when this clock starts, it says 12:59:30, then a new T+1 starts to get calculated in real time. And you'll see this S-vol right here. You'll see this S-vol go crazy. And then you'll know what I was telling you about settlement volume is true. That's 34,000 contracts in 30 seconds. Let's see what it is today. Let's see what it is today. Anyway, got a little bit of time. Notice on NQ and NQ T+2, I don't have the relative volume meters. You know why? NQ does all of its volume in the opening 30 seconds. See that? Super high volume 30-second print today on is like maxed out almost. I think it is maxed out. Maybe one more on the NQ. So that's what I track. NQ T+1 opening VWAP 30 seconds. What? Is that weird? How is that T+1? It's not really settlement. It's a misnomer. It's not really settlement opening VWAP. It's just my own weird labeling thing to help me keep it straight. In other words, it's like my settlement because it's the opening 30 seconds. So I keep track of it. And there's a whole lot of stuff that goes on with the NQ. I haven't even talked about the opening VWAP 30 seconds because I talked about the stuff that's more known. Settlemente. Yes, sir. Look at that. Look at that. All right. Are we in? No. 10 seconds left. And now this is going to reset and it's going to go to 0. Let's watch it, guys. It's cool. Right here. Here comes 5 seconds. Right here. Ooh, big ice. Big ice. Ice, ice, baby. Dun, 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 dun. Yo, stop. You don't know. Turn off the lights and I'll glow. Okay, there we go. Look at that. Look at the volume. 1,000 every few seconds. Look. No, 250. 260 a second. 277. Right near the close. 300 contracts a second. The total calculation, 319 contracts a second for this 5-minute bar. So that takes, this isn't real-time volume per second, that's for the whole bar. So we don't really know, it's really high. It's like a few thousand contracts a second. Anyway, middle of the road VWAP, or a middle of the road settlement volume. I say VWAP because settlement is 30 seconds of the last, VWAP of the last 30 seconds on equity indexes. Anyway, that's settlement right there, that orange line. This is now T plus 2. Stops above T plus 2. Watch it. It's going to move up to the upside. It's resistance still, but you think they're going to go find stops on a day we closed on highs? Sure. I think so, but we'll see. And then I think we get people who want to sell above there. Why? T plus 2. It's now yellow. Right? Is T plus 2 low volume? Yes, it is. It is low volume. So you have to consider that game theory wise. Yeah, Jonathan, it can. It is speed of tape. The footprint shows you speed of tape. Look at the volume build on the footprint in real time. That shows you speed of tape. That is speed of tape. Just different visuals. Whatever works for you. It can take the place, or you might swear by, I've gotten good at some speed of tape indicator, right? That's fine. Whatever works for you. You swear the speed of tape indicator works better for you. Hallelujah. Use it. Whatever. One's not better than the other unless it's better for you. Anyway. Man, another good day. Another good day. Not great, but you know what I'm excited to do? I'm excited to make this YouTube stream. What is it? 47 and 20. $40 and 2 2 times 5 10 240 $280 trading MES and MNQ live. It gets to get put into the title, right? Some of the other ones were a little bigger. I don't know. Maybe there's people out there that are like, I'm not going to make $15,000 or $8,000 a day trading. It's beyond my wildest dreams to do that. I'm so happy with the $250 or $270 or $80 day, right? And then they project, oh, if I can make $250 a day times 5 days a week, that's $1,250. That's $4,800 a month minus taxes, 40%. I don't know, $3,800 to $4,000 net. I live in Oklahoma in a trailer park. My rent for this trailer is $600 a month. Utilities are $150. I can do it. And then I can slowly grow this account. And then, snowball it into a bigger account. And that's how they think. So I'm curious about who watches that video as opposed to something they feel is too outlandish for their account size. Jade, it's okay. I made my money earlier, and I made more than goals. And I knew I was tilting a little bit today, a little overconfident. So it's fine. It's all good. I appreciate that, though. I do appreciate it. So Oliver Mulder says, oh, you look at 30-second VWAP, interesting. Please rewind this video and watch where I rant about T+1. Seriously, watch it. And I do rant. I know I rant, but I don't know. Can you guys tell I love trading? Like, I love it. So can you see why Discord's a problem when we're all talking? Oh, thank you, no such name. I think, what's his name? Rayner is gone. He's probably trading ZM. Or he's non-committal. which is fine. It's all good, Rainer. You aren't the Rain Man I thought you were. No, you still might be. You might just be busy in the market. It's all good, but still looking for a few good men. Glad I did not put my Discord out there, because otherwise I might have a whole bunch of Discord DM friend requests right now. All right, none. This is a good thing. Cool. Again, I don't want to be bothered. Oh, you are still here. Rainer, I would want to talk to you on days where I don't want to talk to a whole bunch of people. Because you've been doing it a long time. And you have already told me you're independent. You do your own thing, and I love that. I absolutely love it. You do what you're going to do. We can both talk a little bit about what we're going to do, maybe, or not. And you just do your own stuff. And we learn, we pick up stuff from each other, and there's that just mutual respect. That's kind of what I like. And you seem to do all right. So, if you've been doing it this long, you're likely doing just fine. The worst thing is getting connected to somebody that's been doing it 10 years unsuccessfully and they know a lot, but they aren't telling you that they don't know how to trade and that they're not profitable and that they're only profitable in one tiny little segment of equities. And they front like they actually know something. You don't know that. And then some people are honest. I'm not talking about the people who are, big market sweep. I'm not talking about the people that are like, transparent. Like, I'm still struggling with trading. I've been trading 10 plus years and I'm new to futures, blah, blah, blah. I'm not talking about those. I'm talking about there's people that have been trading 10, 15 years futures and they just can't get profitable, right? They don't tell you. They know tons of stuff. They can tell you throughout the day. They'll tell you, oh, DevPoc is here. Oh, VWAP is here. Trend line's here. Value area high, value area low. Oh, bull flag. But they have day to day, they just don't really know how to read direction of market or to come up fairly quickly with trade ideas that are viable for good risk reward. But they can just spit a whole lot of information like OTFD, market one time framing down. Oh, we have a P shape. Oh, we have a B shape. Oh, we have a neutral day. We have double distribution, triple distribution. Oh, we have singles. They could point out facts of the market all day long, but not really compile a thesis. And they've been doing it 10 or 15 years. Those are the kind of people that scare the bleep out of me. So I'm pretty good at recognizing them now. But one of the things when you get on social media and then you start getting people who want to talk to you about trading is you have to learn to differentiate between those guys and people who successfully over time have a thesis about the markets that pays them. Because everybody has knowledge about Jim Dalton and market profile, or a lot of people have basic knowledge, but actually putting it into a trading plan, that's a successful trading plan that you can actually operate off of every day and sort of have a framework for making money. Now that is a totally different thing. Totally. What's up, Chirp Tone? Yeah, Rainer, I like it, man. I will turn on my DMs on Twitter for you right now, Rainer. Do it right now, my friend. I will do it right now. Just for you. Because I figured that out about you right away, Rainer. Believe it or not, I figured it out quickly. And I wish you spoke better English, because I know that's an issue for you, or at least you claim it is. So, and I understand we'll likely have that impediment to really great communication. Not a big deal. I used to talk to Gabriel from Israel. He's a good trader, man. Good trader. I still think he's the shit. He's a great trader. I just run a little hot sometimes, Gabriel. I apologize, but he didn't always speak the best English, but we understood each other's charts very well. Gabby Ozar. I really dug your trading, my man. Longtime e-mini trader. Worked at prop firms and whatnot. Okay, settings and privacy. So I get on these little rants. I'm not looking at my chat. He's not. I almost guarantee you that Gabby Ozar is not listening in. Dude is a solo artist. He doesn't give two bleeps about any other trader. He knows his own stuff. I think last time I checked, this guy followed one person on Twitter. One. He doesn't give a beep about hearing any other opinions because he knows how to trade. Kind of interesting. I dig that. I dig it a lot. It's not an ego thing. Although, hey, if you're a good trader, having a little bit of ego, I'm not against that. Okay, where the heck is... Gosh, I don't go into privacy and safety. Okay, direct messages. Allow direct messages from everyone. Boy, I'm about to open myself up on Twitter. Okay, Rainer, if you can send me a message. I hope I don't get a whole bunch of people pretending to be Rainer. Simsum, thanks for stopping by. Oh yeah, pre-market's tough, Chirp Tone. It's so tough. So tough. Look at this. Today's settlement, this is going to be great trading tonight. Today's settlement is right on T+2. Look at that. Settled right on the same area within a few points. Da 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 da. Da 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 da. Is there a reason for that? I bet you there is. Pre-market's tough. Really tough. So I'll tell you guys something. A little bit about my trading. People said they were interested in knowing my story. So I'll tell you a little bit about what I used to be really good at and really bad at with trading. I used to be phenomenal, like 90% 2-hour trading at the open many moons ago. It's all I used to trade. And when I got that good at doing it, and I was that good for a long time doing it, I got overconfident and I continued to trade through the morning. And I learned to give it all back after the first 2 hours of trade. Now you say, Mike, why don't you just only trade the open? Why did you keep trading? Because guess what? I'm stupid. That's why. Okay? I'm stupid sometimes. That's why. And so, and I'll tell you, I actually just talked about this to my wife a few days ago. She used to say, I'd come out, babe, I'm up 4% on my futures account. Oh, she's like, awesome. And then I'd turn and walk back in the office, strutting like a peacock. And I'd proceed to give it all back over the next 3 hours. And then some sometimes. And then I come out, and she could tell by my body posture, oops, he did it again. And she told me the other day, she was like, I used to just want to grab you by your neck and say, quit trading after. And I had so many conversations with her about, I need to stop trading after the first 2 hours. But trading's addictive. And we are, well, I'm stupid. Okay, I am stupid. So I would trade, and I'd give it back. And I did this for way too long. Before I finally said, this is about the time we were going to have a baby. This is 4.5 years ago. Because it took me to trade the open, it took me 4 years or longer of trading to get really good trading the open. You're like, what? That long? Well, guess what? I didn't spend a lot of time on social media looking at Twitter or looking on YouTube. I read books and figured it out for myself. That's why I can explain everything I know. Okay? So there's a lot of value in that. You guys are kind of lucky in that you got a lot of sources. You know how to use the internet. You're good at maybe finding free material. Now, another thing, is it good? Is it bad? You don't know. But anyway, I read books. And then I observed. And I have figured out my own systems. Anyway, at that point I said, you know what? I'm so sick of not being able to trade after the first 2 hours well. I'm going to learn the post-open trade. And all I did for the next few years is focus on after the open. I'd still trade the open. But my main focus was trying to understand the differences. Because I was a numbskull in how I was trying to understand things. So, I'm just looking at 34 trades, 47 points. So 1.6 points per can't even do math. 1.2 or 3 points per. So with losses and everything, I'm averaging. Anyway, I like to look at this stuff. Anyway, I'm this stuff here. Anyway, I'm distracted. So I ended up focusing on all the time after the open for a long time, and I got really good at it. And what ended up happening with that is that as a trader, there's a window where you're sharpest. And when I would try and ultra focus for 5 hours at a time, I didn't always have a treadmill, didn't always have a really nice trading setup. What you end up doing is, or at least for me, is you end up fatiguing out for some of that time. So what I ended up doing for a while is I would then miss the open, wake up late, trade that time after the open, then I got to do it really well. And then I went back to the open and I was like, well, this feels overly volatile, and yeah, you know, once you learn how to ride a bike, you can kind of do it. But I got more comfortable trading after the open. So I'm sharing because I've gone through phases, right? Where I used to be able to trade pre-market and open very well. And then I would trade after the open till about an hour before the close. Got really good at trading that. But I've always recognized that 1 p.m. between 1 and 2 p.m. Eastern is algo o'clock. That's just it can be a choppy time. Depends on the market. So that's its own thing. Hey, return to settlement. Look. Thump. You guys remember I talk about the return to settlement trade? You get so far away, thump, right back up through it. And that trade occurs when volume is all concentrated around settlement. Not last 30 seconds here and here and here. Alright, so this is the mean reversion to settlement trade. Did I take it? No, but I've been talking about it live on stream for a few days now. Same thing with the NQ, right? Mean reverts. right back to the orange settlement. So I guess my point in talking about that is like, with trading, you kind of go through all these growth spurts where you get good at one thing and then you get a little rusty on another thing, and then but then you have to be aware of the fact that you're not just a machine. You can't go for 6 or 7 hours at the same intensity level, right? Maybe if you're medicated, right? Maybe you can. Now, can I go for a long period of time now? Yeah. You know how I do it? I fast. Number 1, improves mental clarity. Number 2, I've been walking for, since I've been on with you guys, 3 hours and 4 minutes. How long is this? How long is this recording? 2 hours, 55 minutes. I've been walking for 3 hours and 5 minutes. 2.5 miles an hour. So does that keep my mind sharp? Yeah, it does. So I sat the first few hours of trading today. I walked the last 3. Walking the last 3 kept me mentally sharp. So I was able to rant about all the things that I ranted about. Anyway, Chirptone, go watch my rant about settlement. It's important. It's really important. I wouldn't tell you that if it weren't true. I'm being honest. It's true. It's true. It is an important rant about settlement. Someone, no, what was his name? No Such Name says it's at 37 or 38 minutes in, or 32 minutes maybe, he said, in to the video. So rewind 2.5 hours, watch from there. But so you figure out things as you mature as a human being and gain more knowledge, right? You figure out, I can walk on a treadmill to trade longer. But then at a certain point, right, I can talk like this for 6 or 7 or 8 hours a day. And if you do it in Discord, and traders are like, well, he loves talking about it. I'm going to ask him questions and ask. That's fine. I'll talk. I'll help you. But then I'm neglecting my family. Things in balance. It's not good. It's unhealthy. So I don't live to trade. Trading is a big part of my life, but balance yourself. Learn to step away. Go do something fun. Go enjoy. If you made trading profits, and you have a plan to roll your trading profits into a larger and larger account, then go spend 20% of your after-tax profits and buy something for yourself. Right? Go make it relevant to life. Right? And even if it's a good piece of food, right? A nice steak or a nice whatever. Nice piece of fruit. Whatever. Nice piece of fruit. Do it. Reward yourself a little bit and still have a plan to roll that money into a larger account and trade a little bit bigger, right? But make it real for yourself, right? While being responsible with your long-term plan of, becoming the next Warren Buffett day trader. Notice Warren Buffett is not a day trader. I don't think that's a bad analogy, right? But God, I want another espresso so bad. Not because I'm out of energy, just because I have my old espresso cup. And when you make espresso, the crema, when it's really good, it'll kind of like hug the walls of the cup, and kind of the foam of the crema will stay in there. That's what happened. I didn't make an Americano today. I made a cappuccino. So I look down right now, and I see this thing, and I'm like, oh, damn, I love this coffee that I'm drinking. And I want more of it, but I don't need it. I need to just drink water and be done. So I'm done. Maybe have some green tea or something. I don't need caffeine, though. I'm good. Really don't need any caffeine. Espresso has, for a double shot, has less caffeine than an 8-ounce drip cup of coffee by 60 to 80 milligrams. So, yeah, I used to drink 2 cups of drip coffee a day. So 2 cappuccinos, way, way, way less caffeine. So I'm not super caffeinated right now. This is just me high on life and on a treadmill having fun talking about the markets. Sorry for the drinking noises. I'm gulping water. This is what happens when I turn my mic up, guys. You guys hear all the weird little things associated with having a second sensitive mic. So anyway, any questions? Yeah, praise your guy. Any questions? No, I don't really trade much Globex, Jade Pasture. You know why? There's not a lot of edge for me in Globex. Once in a great while, I'll trade Globe. I did last night a little bit, but I only made I made 3 trades, 3 single lot trades. Nasdaq twice and ES once. I won on all of them, but less than 1 R. So I'm just, honestly, it moves so slow, and I don't want to watch it. And then I end up realizing I'm in here because the market made a move, and I have some time, and I'd rather be doing this than watching TV or doing something else around the house, because I keep my office open with these big screens turned on so I can kind of keep an eye out on the market. Right? I just enjoy it. And then my son walks out of going pee-pee, or who wants to play with me, and I'm like, I'm over here trading 1 contract for what? Right? And then I just stop. And I would do all right. You're like, well, put a stop on it. Yeah, I could, but I'd be thinking about and checking the trade. So I still feel connected to that trade. It's just how I am with futures. Because, you know, the moves in Globex can be pretty crazy. So I always feel the need to kind of check up on it. So anyway, I don't, long story short, I don't trade much Globex. Let's see. Where should you learn about ICE orders? CME. I don't know. I have so many YouTube videos, Jade Pasture, where I explain in detail about icebergs and synthetics, synthetic icebergs, native icebergs, why it's not really that important to be able to track all of the various ones. That you simply see volume in the footprint, and you can look at rotations, and that's what that is what matters. What's transacting? It's not whether it's transacting as a, so. What you'll see is if you had a pure, let's say if you had the ability to track every synthetic iceberg on the CME, right? We don't have that ability. But let's say we did. What you would see is that there's icebergs everywhere, all over the place, but for less lots than make it significant. Therefore, right? So what do I mean by this? They're doing icebergs on levels for 20 lots, 25 lots. Now you and I care about, oh, I saw 200, 300, 400, 500, 1,000. And so we notice them. But institutions use icebergs, I know this for a fact, all day long on smaller lot sizes, because it's just an algorithm using that order type to get in and out and to disguise buying and selling. It's just not significant enough to slow down the market. Therefore, if that is true, and it is, then what you care about is big iceberg imbalances so that you can use some game theory around. It's not going to tell you whether to go buy, go long, or go short. It's not a signal in and of itself. right? Software companies would like you to believe every time there's an iceberg order, buy or sell. No. But it can tell you about a player disguising how they're getting out of a position or how they're getting potentially into a position. And using and knowing that they're trying to be discreet at new highs, for example, and not putting size on the book, can tell you something about who is likely getting trapped in those areas short term. But let me tell you something. An iceberg may briefly slow down a trend, and I mean very briefly, but it ain't gonna reverse the trend all the time. Okay? In a declining market, I've seen icebergs for 5,000 lots every 5 points 20 or 5 times, so 20 to 20 or 25,000 contracts being bought right in the middle of a decline. Now, could be covering. Either way, they're buying. Covering meaning they have a short position already, and they're covering right into the meat, right into the highest velocity. Market's ripping straight down on panic, and they're covering every 5 points for 5,000 contracts because they're a monster institution, and they are covering that position. Or they own a crap load of equities, and they, at a certain level, they need to hedge off. Or they sold a crap load of equities. Or it's an option SPX market maker, and they have to hedge off. They're going to use icebergs and sell a bunch, right? Because they need to be delta neutral. They're making money off of theta on these contracts. So at a certain point, they need to offset through hedging, right? But it isn't going to often slow down the market trend. As a scalper, icebergs are useful if the market has lost momentum and is at a larger time frame reversal point where traders see, say, maybe a bull flag, and then there's multiple ice levels underneath with, say, aggressive buying afterward. Then you get the idea, a lot of traders got trapped. They did it passively, no size on the book. We now have a descending trend line. It breaks that. All the shorts cover. Maybe people get long through the trend line, right? We might call that a Wyckoff spring, right? Now, I'm going to demonstrate that this market could be a Wyckoff spring right now, but I'm not saying it is. It's not the same setup. Okay, so let's do something. I'll demonstrate what I'm talking about here. All right. Let's say this market's in a downtrend. And it's now done what it's done here. All right? And this all doesn't exist. All this doesn't exist. But this is the movement of the market. All right? And now we put a line here. And there's ice here. Okay? And this is how it is. There's all these volume nodes here. Now there's a trend line. Let's say it goes here like this. Now, let's say there's a line here, right? Right, this yellow line right here is another line where the market has come in. Let's say there was ice here too, right? Market bounced, went up. We're looking at this like, oh, they distributed out of some of this ice here, right? There's iceberg here, right? There was an iceberg here in real time. Huge delta imbalance. Okay. The market has moved like this. We're in essentially a descending triangle pattern. The market sells off, rips down. All these traders here are like, bear flag, descending triangle. We're breaking down. They ice it up here. Boom. We're like, well, that just could be when it bounces, and then it comes back out, and then the ice comes in. Ice. So bid ice. It's turning bright red. The contract values on this left side are going bananas, right? 1,000 contracts. They haven't started buying it. They're just passively absorbing. All the retail people who don't use footprint are going sell, 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 breakout, breakout, and they're just passively absorbing tons in real time. And then all of a sudden, the market goes, they go and they market buy. Like all the retail people are bidding on the ask side here. Let's say this is all ask levels here. Asks, ask. They're all showing real size here. 25 lots, 50 lots, 25, 25, 25. And there's, on the book, there's hundreds of contracts sitting here waiting to sell. And this big player just absorbs 3,000 contracts here. And then they buy through all of this. So there's no, and as they buy, there's sellers too coming in. So there's no zero prints or anything. They just buy against the market here, but they're averaged in from in here. This is the trap. So iceberg, the trap, they buy against all this. And then they keep buying. They iceberg out here, okay? Not totally, but they iceberg out some right in this area, right here. Into what? The trend line. And then all the trend line people go, oh, yay! Trend line's holding. Trend line's holding, right? And maybe even some of the footprinter guys are like, go short, go short. They don't know about rule of three. They don't know about mass psychology. So then people get short here. And the big player goes, yes. All right, I already bought here. This was extra. I absorbed the market through here. I'm able to get out in profit here because my average is here. But now I've got more bang left. Okay? I've got more bang left. I can buy. And you know what? Deltas on the day are negative 9K. Everybody on FinTwit is, the sentiment is bearish. On a 15-minute chart, the market looks like this for the session, right? And this activity here represents what happened in this area only on low time frames. Now you have a trend line, right down to here. And they're selling here. And everybody's like, ha, I know the obvious. One time it hit, two times, third time's a charm. I see a pattern. So you pattern, your brain goes pattern recognition. Yeah, I see the pattern. We're going like this. Cause sell it stupid, Mr. Obvious. That's what we're doing. That's why I have rule of three. That's why it works so often. Okay? That's why it worked today. That's why I talked about it. It's a plan. It's an idea. Did I make money doing it? No. But it's there. You know, there's some days I will jump on the right side of the train and ride it. But today the timing wasn't there. So guess what? The timing's not there. It's not A++. It's not optimal, guys. So I don't take it. I take the optimal times. Why? Because I've seen it 1,000 times. So I know which times are optimal. Okay? So anyway, back to this scenario. Sell, sell, sell. They got out. They're like, we know big negative deltas. Sentiment's bearish. I know that I'm in position here. I ain't selling here. Right? I bought against players here. And they're in profit. But I got 5,000 contracts to spend. Oh yeah, buddy. And guess what? I have a trend line. And we have a perfect complex retracement. I'm going to buy through here. And if I'm right, I should be able to see some stops get triggered. And the bid side should get a little crazy. People should start covering. If I'm wrong and I buy here, well, and there's a bigger fish waiting for me here, and I see that, okay, well, I'm going to still get out. And I'm going to get out for having made a little bit of money. But if I take this risk here and this market goes, I'll bid this market. I will bid it. And if I see what I think I need to see, which is no real sellers coming into the market here, then I'm gonna if we get here easily, I'm gonna bid this thing. I'll come in with a few hundred lots, and I'm going to bid it. And if they all start running, I'll sell out of some of my position, and I'll still go fill my 400 lots here. And then I'll keep bidding. Because if I break this area, all these people I bought against, their stops are up here. Okay? So see how understanding the way you would play if you were big money here can help you to trade the right direction of the market. Now, most people can't think that way. I know that. But you can think like a pleblito. You can think like an idiot. All right? So, if you can think like an idiot, you can do the opposite. And you can figure out the same thing. So that might be the easier angle for you to approach the market from. Doing the opposite of your idiot instinctive ways. But this is how the wolf thinks. This is not how the retail mind thinks with these volume nodes. So anyway, I know there's a lot up here. But if you are following carefully, it would all make sense. This setup right now with hardly any volume is not the same setup. It's what I explained is a scenario. That's it. Just a scenario that happens all the time in the markets. All the time. If you can't think that way, then think about what you're taught to do at these levels, and if what you're taught to do, if the market does the opposite, then infer what you should be doing by doing the opposite of what you're taught. Because if what you're doing is working a lot less for you and you're not profitable, then flip your psychology that way. And again, you may not understand what I'm telling you because you don't think that way. Okay? I happen to have some experience in other markets that allows me to know what trap traders look like because we could trap. Okay? But if you don't know how to trap, you don't have any first-hand experience, you've never risked your own money to try and trap traders in, say, smaller markets, then you're not going to have any idea about how to do this. But I'm telling you because you can kind of, some of you are going to be able to apply what I'm telling you, and you're going to be creative about it, and you're going to be able to project yourself mentally into that headspace to be able to understand what the large players are doing. And so that's why I'm always telling traders, think about the markets in terms of trapped traders. Think about the markets in terms of the weakest money. Where do they have the most to lose? Where are stops likely at based on volume nodes? And if you can start anticipating that it looks like the market wants to get back, well then you can get long with defined risk with a target above the breakout zone. And those opportunities in the market, right? So for example, a lot of volume right here above T+2. All right? Lots of volume here and here, right? The USA 2, right? USA 2, that's the TPO that I explained. I did a TPO, how to build a TPO chart, and I explained why I used USA 2 time period, right? So this is the USA time period bar, 5-minute bar, right? See how the volume gets less and less and less. See that? 34,000. This is positioning for the next day. All this is likely stop hunting, right? Local traders getting shaken out, okay? Or whoever's positioned here trying to create trend for overnight, trap traders, right? All kinds of reasons. But let's say we're in the middle of a session and there's volume here, right? And you start to see, hey, there's not a lot of interest down here. It just keeps getting whoosh, bought up. Some point, all right, let's say there's a big volume node here, right? Let's just say. It just keeps getting bought up. Some point, you're going to be able to enter here with the stop here, right? Below the volume node. You're like, well, they hunt volume nodes. Well, maybe they do. You got to put your risk somewhere. There's no guarantee of being right in the market, okay? Now, stop is here. Stop is here. Entry is here. Let's make entry yellow. Okay? Entry's here. For those reasons, okay? Where's your take profit if you know there's a ledge up here? Here's blue. Your take profit is what? Here's 1R, 2R, 3R. So your risk reward is not new highs, right? You're not doing the normal retail thing of buying new highs, new pivot highs, new swing highs, new breakouts with the stop here. Now for 1R, you gotta go way, way up here, way up there, right? Or some random stop location here, maybe hoping that there's a volume node here that takes you out, right? The right thing to do is put it under the swing low. And that's what a lot of people are taught. Now your risk reward, he has to be a huge breakout for it to hit 1R. Or you tighten it up randomly behind something and they stop hunt you and go. But buying here, anticipating this bigger movement with players who have not gotten, remember, all this in here is a huge volume node. These are hedge funds, these are whatever. They want compensation, guys. They want compensation. So if they want compensation, and they really don't care about some movement like this, where do they get it? New highs. So if you're entering where other people are told to go short because of trend, but you're using some other thing, you can put a tight stop on and easily get 1, 2, 3 R's. You could even get 2 R's into the prior volume node. Now, you could also get 4 R's and 5 R's and 6 R's if we make new highs. You see how that thinking is different? Now, the 6R and 5R move is a lower probability game. Why? Oops. Why? Because the highest probability move is to go get out against the players that were wrong here. Because you don't know who's positioned here. But my question to you is, if you had a volume node here and we bounced up, if you had a stop here and you had an entry here, just getting back to the node, is it better than 1R? Look, 1R, 2R. Yep, it is. So you find these kind of trades all day long with high probability because you're thinking not from the sheep's perspective of, oh, I'm so afraid. Oh, no, you're thinking someone spent a bunch of dinero here and they want to try and get out, and they obviously are going to be willing to try and spend money down here to get it back here. Because, again, there's always the trap of they're averaged in here, they're strong hands, and buying above gets the other side to capitulate, or the remnants, the players who essentially never take profit here. The smart players are taking profit in nodes, and that's why you look at this market, and if you analyze it from the perspective of smart money de-risks intraday, you start to recognize, node, new low, big sell bar, node, 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 new lows, node, right? You'll see a bunch of volume nodes, and those are short-term distribution, de-risking. So anyway, different ways to look at the market than you were maybe likely taught. So you think about it from a different perspective, it can really help you. Super Walnuts cracks me up with the comment. Haha, I've had a couple of decent trades hitting the wrong button and shorting when I wanted to go long, and it ended up working well. That's interesting. Anyway. Appraiser guy, so is it assumed that all big players in the last 30 seconds want compensation is the same direction? No, it's not. And it could be, so the story gets complicated, doesn't it? Because maybe it's hedging, right? Maybe they're underlying, maybe they're using futures to hedge. So their underlying portfolio is going another way. They don't care about compensation. Maybe they take off the hedge when the market goes in their direction, right? Maybe they're all short and they want to be delta neutral. They're short stocks, they want to be delta neutral. So they long futures, right? And when stocks break down past a point of resistance, it tests, then continues. Now they were long futures to get what? Delta neutral from their short stock position. They dump their futures contracts, further exacerbating the move to the downside, right? And they're dumping that long position because they have a thesis about where the market breaks. And of course, there's other players who come in, scoop that, and say, "Ha! These guys took a position. I'm going to do the opposite thing, right? Because I'm bigger money than them, right?" So it gets complicated. But the idea of sharing this volume, and that when volume areas break, whichever direction, if you can anticipate that the market is going back there, and you can put on a trade that allows good risk to reward back to the volume node, then you can put on more trades for potential better risk reward that maybe aren't described yet by the vast majority of retail gurus and traders. And so you're now thinking about the market in a way that is completely different than 95% or 98% of losing traders. So they're not taught how to think about the market in this way. And so they do not give themselves the opportunity of the other side trade. And that's why so many traders are shorting when they should be longing. And they just can't figure it out because they're not taught this other way of trading. And I'm telling you, I'm very successful trading this way because most people can't think about it this way. They think about it from the other perspective. So I'm sharing with you guys, hoping some of you start to utilize it, and maybe some of you stay connected with me, and we get, if I see some of you are able to understand this, maybe we'll connect on Discord. So that's so I'm being super transparent. I'm saying my underlying interest in sharing this with a few people on YouTube is ultimately selfish, so I can connect with some of you, and we can, some of the smarter folks out there, and help each other. So I say help each other, and I mean you can help me too, but you will be helped as well. So reciprocal relationship. And if most of you are newbies and you never get there, that's fine. whatever. If you burn out, that's okay. But you'll have learned something by watching my YouTube videos, and I'm taking a risk by sharing all of this publicly, knowing that the vast majority of people will start to hear this and go, gobbledygook, doesn't make sense, my brain is twisted, this guy can't have it right, it's too complicated, F that guy. He's not telling me what I want to hear. So I know that this isn't going to become, this YouTube video, and me talking about it, it'll never become popular. You know why? Because I already know what people want to hear. I've tested it out with shorts. You see on my channel, I've got a few shorts there. They get the most hits. Everybody shares them. They're like, oh, 30 seconds of how to trade. Oh, make it sound exciting. I'm sharing real stuff. But if you make it sound simple, you get a few thousand hits immediately, right? So I'm addressing the fact that I'm telling you something that's very valuable that most people won't see value in, and I'm fine with that. I prefer that, which is why I said earlier in the video, if you get 100,000 people watching this, I won't do it anymore. I'll go figure out what's working, and I'll hide myself from the world, and I'll go make money at it. Because I can think about the markets, whereas some people can only practice a taught methodology. Me, I'll figure it out. I can identify with Linda B. Rashke, she's in her book, or in one of her interviews for New Market Wizards, she says, I'll figure it out. If the markets change, I'll figure it out. I agree. I feel that way. I'll figure it out. If everyone starts using settlement, if settlement becomes a thing where 5 to 10,000 futures traders start using settlement, I'll figure it out. I'll figure out how they're gaming it against the weak players. I will figure it out. I'll see it. But for now, it's gold. It's gold. I'll notice when it doesn't become gold. You don't think that I'm not aware of the fact that I'm sharing something that's gold? Of course I know it's gold. You guys that have added it know it's gold. So, this is still my explanations teaching you about settlement is still Bitcoin 2016. Lots of room. Just letting you know. But pretty soon, settlement will be Bitcoin late 2017, and everybody will be overusing it and they'll get blasted. Guess what? That's just how it works. And in all fairness, you need to read about settlement, and you need to go look at settlement, have it on your charts, see what happens when the market gets overextended, settlements on highs, and when liquidation breaks occur, and how the market acts on first touches of settlements, tests of settlements, tests from the upside and the downside in a trend up versus trend down market. Ask yourself basic contextual questions like, are we in a trending market? Are we in a bull market, an upward sloping market? It's going up. Are we in a bear market? How are we reacting in each market when we first touch it? How are we reacting when we push through it? Are there liquidations? What do liquidations look like in real time? Go put replay on. This is not going to be a 5 or 10 minute investigation on your part. This is going to be hours of you watching the tape, right? And if you can't do that in your off time, well then welcome to the next few years of watching every day and catalog it. Meaning, I hope your memory is good, and I hope you're paying attention to those things. Then you'll know what I'm saying about settlement and what kind of questions to ask about settlement. So notice we're bouncing off of TD Ameritrade VWAP right now. And I said it's the only one that matters. Right? Look. The green dotted line. Right? Think I was lying to you about that? Look, this green dotted line is TD Ameritrade VWAP. See that? Bing! Anyway, I'm not telling you guys stuff because I haven't paid attention for the last umpteen years. I'm actually sharing real stuff. But it's a lot. I get it. It's a lot. And that's why I said earlier, if you're a lifelong learner, you love learning, trading is for you. If you're not a lifelong learner, run. Save your money while you can because you're playing against people that love learning and are smarter than you. Probably. Just being honest. Would hate to see people go through a lot of pain. There's all kinds of stuff going on today. Elliott wave right now. 135 into the close with an A pullback right now. There's rules for that too. Now, do I just take the Elliott wave from the book description of what Elliott wave should do? No! I've applied it to futures and observed it for years and years and years and only have Elliott wave that applies to futures that works repeatedly. I don't take all the esoteric Elliott wave BS. But did I learn all the principles? Did I read books? Yes, I did. But I only apply the things that work with EW to the markets. Why? How did I know? Because I'm curious. That's it. I'm just a curious cat. I like to learn. I'm curious. And so what do curious people do? They ask about markets nonstop. Anyway, it's 2 p.m. Markets are closed. Blah, blah, blah. Anyway. Great chirp tone. Appreciate the 2000. I appreciate the comment 2008 Gucky. I appreciate that, Declan. Yeah, the concept is simple and difficult, and because it's kind of like DDC. We were talking the other day about our brains. DDC is a person, so I'm giving him a shout out. We were talking the other day about our brain's inability to wrap ourselves around big numbers and concepts. And trading is a lot like that. So we were talking about risk. But talking about risk and probabilities in the markets at what's taught to be the wrong time is very difficult as well. Because our brains don't view risk like they should for trading, right? So I guess not the analogy, but the point I'll use to prove that our brain does not deal well quickly with big numbers, which relates to probabilities in the market, is the fact that if I told you or asked you, what does a billion footballs all standing on their ends put on the ground in a big square visibly look like? Don't use a calculator to figure out the diameter of the football and assume how big a square would be and then multiply it out and quickly say it's from here to that town. Don't do that. I'm saying, what would the billion footballs stacked up like that look like? Right now, we're standing up on a hill. What would a billion footballs all stacked or put head to head across a big field? How much of a big plain or field, right? Or whatever, right? Some valley, right? What would it look like? How much ground would it cover? Just point it out to me by landmark. Do it quick. I give you 5 seconds, 2 seconds, 3 seconds. Can you do it? Nope. Unless you have experience knowing what a billion looks like, well, you can deduce everything from what a billion looks like. But if it's your first time trying to calculate such a high number, you're left going, maybe this much? But your brain can't actually calculate that number. Now you say 10. What does 10 look like? You're like, go, yeah, a few feet. That's it. Yep, you're roughly right within, I don't know, within 75% of the right amount. You could point to it on the carpet in your living room and go, hey, that's what 10 footballs looks like. All right, what about 10,000? Well, you might be able to deduce really fast. Well, you know, a square foot, I got a 2,800 square foot house, footballs, six, I don't know, half square foot per football, 2,800, 10,000, that's like 4 houses. Okay. I don't know, you get roughly close. Hey, 4 of my floor plans, right? You could figure it out because of your math. But when you start talking about all of the different complexities of the market, and you don't have any experience with any of it, and you don't ask questions like that every single day. Well, what does this kind of a volatile move look like? What does rate of change look like over a short period of time in a market that's really rallying that can be sustained? Your brain doesn't know how to calculate. It's too much variable. There's too many variables. You're guessing. People do that in trading all the time. So start to quantify things. If you use an indicator, use an indicator that you understand, 1, and 2, understand how to use the indicator for what you're doing. So if I have volume per second, I know it's volume per second for the average over the whole bar, right? Well, here's a question. Would it be useful for some of you guys to have volume per second on a reference chart that is a 1 second time frame chart, so it's spitting out essentially a bunch of speed of tape, but in real time for the current bar, so the look back is only 1, and so you're constantly seeing the 1 second average, not for the whole bar, but for the 1 second time period. Right? These are the kind of ideas you should be asking yourself. So if you understand why you're using it, when you understand why you're using it, you can now ask yourself other questions that are relevant. If you don't understand, hence the reason I have my pinned tweet, which is take a few things and understand them well. Anyway. Thinking Fast and Slow. Cool. Great book. Yeah, I'll have to check it out. Anyway, I gotta go. I need it go. Jesus. What day is it? Thursday? Yeah, okay. Alright, all these Amazon deliveries. So anyway, that's the live stream. Hope you guys have a really awesome Friday. Hope you enjoyed the live stream. You know, like, share, subscribe, all that good stuff. Keeps me, I'm a little like Devin Larratt. If you look at Devin Larratt's last response to Levon Saganashvili. He gets on the live stream and likes to, or he does what he does because he has fear, right? And he seeks out fear because he wants to feel alive. So I come on YouTube to feel a little bit more alive while I'm trading, demonstrate I know what I'm talking about and all the other things that I've talked about, and I get a little rush from doing this. So I may not do it forever. So once I get bored of it, I won't do it anymore. Because again, I'm not making money off the YouTube and off subscriptions and any trading service. I don't sell chart books. There's no referral codes. There's none of that, right? I'm just on here having a good time, getting a kick out of interacting with some of you guys, and then kind of just looking for a few good men and women always. My feelers are always out there. But if I can't find them, whatever. I'll do my own thing. Still do it well. And I don't need the YouTube, so the more people that watch, the more people that interact, the more people that give me a little juice, the more I do it. So I don't know if you guys want the YouTube to continue. I really need more activity on the YouTube, right? More people getting involved. So like, sharing, all of that, it helps. So I hope you guys believe me. If you don't, that's fine. But that's where I am at, and I offer a lot of value, guys. I know I do. So I just hope you guys can recognize a fake from the real thing, essentially. And so anyway, like, share, subscribe. I appreciate you guys interacting today and being here. And I don't know. Follow me on Twitter, ask questions, share your charts, share your setups. I'm curious about all of them. You know, why I like Twitter is you can't put me in a corner and keep me on a mic like on Discord. I feel like I could get sucked in forever. Twitter, I do it on my time. Do it on my phone once in a while, make comments. I really enjoy it. So anyway, have a good one. I hope you guys are killing the game and having fun doing it. So, peace.